All right. Hello, everybody. Welcome back to another market close. This is going to be the craziest market close. My hair is already crazy. Everything's crazy about this. This is going to be a hell of a market close today because we got Nvidia, folks. We officially have Nvidia today, and it's going to be an exciting one with Nvidia because not only do we have Nvidia, we have the Fed minutes that came out. When did the Fed minutes come out? The Fed minutes came out literally 2 hours ago, and they kind of tanked the market. But outside of the Fed minutes, we've got Snowflake after hours and ELF after hours. So today is going to be a big one on earnings. Get ready, get strapped in. Make sure you got your chicken, your popcorn, your juice, whatever you need to get ready for Nvidia earnings. But we're going to have some fun over the next couple hours and discuss what's going on in the world of Nvidia. So we have 13 minutes? Let's discuss a few things that happened today, and then we'll get into, I want to show you guys NVIDIA's last quarter and just refresh the numbers a little bit. And then at 4 p.m., all hell is going to break loose and we'll get NVIDIA earnings. So first of all, what's going on? S&P 500 currently is at 528. 93 TMC says, admit, my girlfriend says I watch you too much. You got to tell your girlfriend that sometimes you got to spend time with a man. And even if it's not romantic time, it's time that hopefully helps you make more money. And if it doesn't help you make more money, then it gets you to enjoy the other parts of life that matter, like the stock market, which to an extent matter more than your girlfriend at the end of the day. Anyway, here we go. 528.71 on the S&P. Why is the S&P down almost 1% on the day? Well, the reason for that is because the Fed, these people that claim to be the gate holders of the interest rates, and it's not that they claim to be, they are the gate holders of the interest rates. They said this today: we are concerned about progress on inflation, and we don't believe it's coming down as dramatically as it needs to. They also said on the FOMC minutes that we are absolutely prepared to keep rates higher, and or not higher, but to keep rates where they are, which means a rate cut isn't coming. And that would be obviously not the best for the broader markets. As a result of that, at 2 p.m., once they said that, the entire market took a little bit of a dip. And honestly, I kind of expected it. You wouldn't imagine the S&P, which is why I tweeted right here, Nvidia, it's time for Jensen to really prove the market wrong because the market just flipped red. You wouldn't expect the market to be normal on the day of Nvidia. Last time when Nvidia had earnings, I'll show you guys right here on their chart. Nvidia right here down. Oh, wow, it's recovering. It was down 1.5%. Now it's recovering 12 minutes before the close. It was at 932. Now it's recovering a little bit. If we look at the past 6 months on Nvidia, right before earnings, we were at this level. We went from 738 to 649. If you can see that drop right there, that was on February 21st. And the entire market was scared. I think the S&P was closer to 495-ish around that time, or maybe 485-ish. So that we had a little bit of a drop there. And then we rallied all the way to 974. Then 3 weeks ago, we had a nice little dip of 10% in a day, $200 billion market cap lost. S&P, Iran, Israel, a lot of random stuff that was going on. Oil prices were getting higher. Inflation concerns were getting stickier. And then we went all the way down to 756, and we ended up coming right back here to 960 at the top, right now at 946. NVIDIA is going to have to put up some really crazy numbers in order for this to get a bit higher. Now, because of what the FOMC minutes showed, the S&P fell, QQQ fell a little bit. Robinhood took a bit of a dip today. Is Robinhood still under 20? Robinhood 1973. It retested 20 a couple times, but again, the dip was just a bit too high for Robinhood, or the instability was just a bit too high today. And that got that one down 6% on the day. Also, some of the margin stuff that came out, the street might be a little concerned about that. So that's why that is down. Snowflake is after hours as well. So we'll have Snowflake. That's at 162 right now. Shopify 58, up 3%. They got upgraded to 74. But the broader market is definitely a little scared. Google's down 1%. Microsoft's down 0.3%. Tesla, we had such a beautiful pump yesterday on Tesla. Now Tesla's back down 4%. The entire market is incredibly scared on NVIDIA earnings, and rightfully so, especially because NVIDIA is not really down that much before earnings. It's down 1%. If NVIDIA was down 5-6%, I think the market would feel a little bit more comfortable thinking that the move to the upside would get NVIDIA back to where it already was. Now, if NVIDIA goes up 5-10%, we're going to $1,000. If we go down, we're probably going to $850 or $700. So it's going to be really, really exciting to see how this plays out. Ryan Carlson says, put my daughter's life-saving on QQQ calls. Honestly, people will say you're gambling. I will say you're a risk taker. So I wouldn't listen to those people. No, I'm just kidding. You're definitely gambling. Okay, let me ask a poll. Let me put a poll. I know you didn't do that, Ryan. Let me ask a poll right here. So we're going to do two things. Ryan actually is the guy who won the Amazon $25 gift card last time. If you're the same Ryan, because I asked for the stock price that Tesla would be after earnings, and he got it right. I think he got 161, and it was exactly 161 after hours. So we're going to do this right here. We're going to do the first poll of NVIDIA pump or dump. That's going to be the first poll. And does NVIDIA pump or dump? And let me ask that question right here. And then you guys have to give me your price target for what you think NVIDIA will be. And based on that price target, whoever gets it exactly correct or the most correct will get the $25 Amazon gift card. So NVIDIA dump or pump. That's the poll after hours. And then put your exact price target. If you get it right, you know what it is. Just DM me on Twitter. It's in the description. And let me know. Just take a screenshot of your chat, and if I see it in the chat right here, then I'll just tell you to message me on Twitter. I'll tell the exact person to do it. But everyone get one entry. Don't put like 7,000 entries. Get one entry. Let's see what we get, and let's see what people say. I have no idea. I think we're going to go up, but then again, NVIDIA's up so much year to date that's a little scary. Not sure exactly how it's going to play out, but I do think it's going to be a decent earnings. Primarily because of the fact that I think AI is not slowing down. And I think if AI is not slowing down, then we are going to have a lot more momentum than what people think it's going to be. All right, we have 70% of the people voting pump right now on NVIDIA. 70% of people voting pump right now. All right, let's get a little bit of an update from CNBC, see what they're saying on NVIDIA, and then we are going to look at NVIDIA's balance sheet from last quarter. And then go further from there. So let's get a couple analysts, and then we'll keep going.
But why don't you tell us, as a long-standing shareholder of NVIDIA, how you're thinking about this report tonight?
Yeah, I feel like I've grown up with NVIDIA. It's like it's been with me for a long time. Look, I feel that this is such a hard story. Believe it or not, you're up in this name. You're in this name for thousands of percentage points. The problem, what makes it harder, normally when you have a stock that goes up this much, you say to yourself, okay, it's an easy sale because the valuation is caught up with the fundamentals. Oh, look, now it's outdone its fundamentals. Unfortunately, NVIDIA doesn't make it that easy for you. It just has not outdone its fundamentals yet. It could happen, hasn't happened. And here's the example that I want to give you. In January of 2023, people were saying NVIDIA is 45 times earnings. The average semi is 18. It's too expensive. We understand it's fast growing, et cetera, but it's up so much. Here's the problem. NVIDIA then returned 239% for the remainder of 2023. It's up another 93% this year. So cumulatively, it's up 540% since January of 2023. The problem now is the stock is trading at a lower multiple. It's 34 times earnings. So it's really a difficult stock to be long. I say that tongue in cheek because, of course, it's one of the most rewarding names in the history of the stock market. But it doesn't get easier just because it's gone up. It doesn't make it simpler to sell.
So it's well set up for you, Stacy, to tell us about your own view of the setup. As Josh points out, there's a lot going into this, a lot at stake, and maybe a lot to live up to. How do you see it?
Look, I think it's going to be fine. Like, maybe that's being a little too blasé, but I can't imagine that anybody's going to come off of this print feeling more bearish about the opportunity in front of them than they felt going into it.
I think he's right, dude, and I think we're going to see some momentum on NVIDIA to the upside. I think it's going to be good, but we'll get the numbers in about 10 minutes, and we'll see what happens. Does anyone know if it comes out at 4 p.m. or 4:05? I think it's actually 4:05, but people will know by 4 p.m. Someone always knows at 4 p.m. All right, so this is the last quarter's numbers. I just want to review some of the stuff we saw to give you guys an understanding of how insane these numbers are. Revenue last quarter was up 126% year over year. That it's $60.9 billion for the full year 2024 versus full year 2023. Their revenue, again, was up the gross margins were up about 15 basis points. Operating expenses up 13%. Operating income up 311%. They went from $9 billion to $37 billion. Net income was the literal profit on their balance sheets. went from 8.3 billion to 32.3 billion, up 286%. They 3x their net income at the scale that they currently are at. It is absolute insanity. And then the earnings per share, diluted earnings per share, went from 3.34 to 12.96. It was just an incredible quarter. Now, last quarter, they did 22.1 billion. What's really interesting about how I'm looking at the expectations for Nvidia is that a week ago, the street was expecting 22.8 billion. This morning, I updated Bloomberg. The street thinks they're going to do 24.6 billion. And this is where the analyst stuff and the stock market psychology and perception of the markets is so incredibly interesting. And a lot of it just comes down to emotion. I'm looking at the Bloomberg saying, hey, we're expecting 24.65 billion. A week ago, they were expecting 22.8 billion. So Bloomberg, and Bloomberg is just a representation of the analysts, they are saying, actually, no, our expectations were 22.8, and if they did 24, we would be happy. Now our expectations are 24, and if they do 22.8, or if they only do 24.1, we're not going to be that happy. And so Nvidia really has to crush it out of the water in order for this to make sense. I would assume about 26 billion, at least 25 billion for them to have a healthy beat. And if they come in a little bit lower than that, and that's also why this earnings times it's so dicey for companies, because you would think, all right, they did 22 billion last quarter. They're probably going to do 23, 24 billion this quarter. But now the street's like, no, they need to do 26, 27 for us to really give them the momentum. And then to be fair, it's up 100% year to date. So obviously the street's very excited about it. But the expectations are very high. So we got Nvidia here at 948. Now, one way to play Nvidia, me and my friend TJ, who I do a podcast with about options, we actually sold some puts on NVDL, which is a 2x long Nvidia daily ETF. So that means if Nvidia goes up 5%, this thing goes up 10%. So this thing is up 200% year to date because Nvidia is up 100% year to date. Now, what is the play we did? Yesterday, we sold a $39 put expiring on Friday and we did 10 of those. So we gave up 40,000 in collateral. And we brought in $1,500 in premium with cash curve puts. This is TJ's screenshot as he's showing it to me. And then today we sold another set of puts at $38, 5 of them, and we brought in $750 in premium for collateral of 19 grand. So basically we have collateral of 60 grand and we've collected about 2,500, 2,300, which is not bad for 2 days because they all expire on Friday. But the question is Nvidia going to go up? If Nvidia goes down, NVDL goes all the way down and we have to roll out of those or we get assigned those shares. So that's the options play we're doing. Let me know in the chat if anyone is doing an options play on Nvidia. And if you are playing this in any type of manner. I think it's kind of scary to do an options play just given the nature of what's happening with Nvidia. And the reason for that is because we just don't know what's going to happen. I did see that there are 17,000 calls open right now for the $1,000 strike call expiring on Friday. So, what TJ and I did is we sold some puts, which is a bit more conservative. And yes, there is downside risk to that, but it's more manageable. If it doesn't get to $1,000 and preferably above $1,000 by Friday, if you bought those calls, and 9,000 of those contracts, 24,000 of those contracts were traded this morning in terms of the volume, then you're screwed, right? You lose your money. Those contracts are going for about $2,000 a contract right now. So you're going to have to move 8% to the upside in order for this to really print. But people are gambling, or people think Nvidia is going to $1,000, and so we're going to end up seeing how that plays out. All right, we got 30 seconds until the market closes. Again, put in your votes on what price you think Nvidia is going to be at. Right now, 68% of you said Nvidia is going to pump after hours versus dump, and whoever gets the exact price or closest to the exact price, I will send a $25 Amazon gift card to. We did that for the Tesla earnings as well, and let's see what ends up happening, dude. Are you guys shaking? Because I'm shaking a little bit. My heart's beating and shit feels like I'm on a first date or something. Like, it's just like scary right now. All right, the market 4 p.m. is officially closed. And now we wait. There is nothing to do other than wait. Nothing to do other than wait. Now, I see all your... wow, Sanjay is bullish. He thinks we're going to 1,900. Dude, if Sanjay, if it goes to 1,900, I'll send you a $50 Amazon gift card, not a $25 Amazon gift card. I'll send you a $1,900 Amazon gift card, Sanjay, if we get to 1,900. Oh, my goodness. I think it goes well, dude. I think it goes well. I don't think it necessarily goes horrible. I have everything pulled up that I need to have pulled up. Oh, by the way, to make sure the internet doesn't lag, I have something pulled up on the side to make sure I can share a different screen. Let me just make sure that's in play so that I don't put too much stress on my Mac, and I can share CNBC easily this way as well. All right, so we got NVIDIA, Snowflake, and ELF. NVIDIA, Snowflake, and ELF. If anyone gets the numbers, let me know in the chat. I think it's probably going to take about 5-6 minutes before we get there, but we will see. We will see what it ends up looking like. Let me refresh a couple things here, and let's keep Twitter open. Let's see what we get on Twitter. Twitter does not have the numbers yet. This is like we're all just sitting here in silence, dude. Look at this. Look at this. Someone what they just posted. This is exactly how I'm feeling. This is exactly it. Look at this. This is me, dude. This is me. Oh my gosh. This is and you know my main position is not in Nvidia. Let me know in the chat how many shares you have in Nvidia if you feel comfortable sharing. How many shares do you own in Nvidia? But Nvidia affects the market, and so you know everyone's plays are gonna do not the best if Nvidia doesn't crush it. Now, if Nvidia stock falls but they crush it, that's okay because they still crushed it. But if Nvidia sucks, then their stock doesn't even have a chance to do well, which means you know the entire market gets a bit more scared about what happens. Garcia has 35 shares of NVDL. What else do we have? 0 shares of Nvidia, 10,000 Palantir. Okay, I love it. June has 34 shares. Prakash has 110 shares. We have no price action yet on Nvidia. It's up a little bit after hours, just a little bit, but nothing crazy yet. So we're still waiting to see. And I got CNBC here, right here. As soon as they do the earnings report, I have something I can share. And so we'll be good just in case. All right, here we go. Here we go. Oh boy. Oh boy, oh boy, oh boy. This is so scary, dude. This is just so scary. Snowflake is flat after hours. ELF is also flat after hours. ELF Beauty, if you guys got that one, that one's going to be interesting as well. But we'll see what happens with ELF. Ulta Beauty was kind of affecting ELF last month, and if ELF goes the opposite of Ulta, then seems like they have a little bit of a different business approach than Ulta Beauty. 420 numbers are out. We have till 420. Actually, is that true? Is that true? If we have till 420, that's okay. All right, let me share this screen and let's get a little bit of coverage, and then we'll keep going. Let me share this. Is this sharing? Okay, here we go. Let's listen to this. There we go. Yeah.
4 hyperscalers are going to spend $170 million this year alone on CapEx for Gen AI. Globally, we're going to see $200 billion being spent on. So that's a tailwind for not only Nvidia, but obvious for this many. They're going to be winners, and there have been.
Okay, she's messing up too much. Let's get a different video up here, and we'll see. All right, so we actually do have some time until Nvidia comes out. Okay, that's actually good. We have 20 minutes until we have to really throw up. Yeah, it's super laggy. Yeah. We're gonna switch. We're gonna go to something else. It's super laggy there. Let's get some other coverage on Nvidia and see what we've got going on. This is going to be, oh boy, this is going to be exciting. Here we go. Let's pull this up. Let's talk a little bit about this, and then we'll get into Nvidia. Let me pull this up here.
That's the most important thing going on today. All right, Joe. Wolf on Nvidia. Rarely has there been a single stock with such importance. As long as it...
Let me ask this question while this is playing. Do you think they're doing a stock split? Do you think they're doing a stock split?
Tops expectations, they say. Nvidia is likely to remain a key tailwind for the overall U.S. stock market. They're going to live up to the hype.
Do we really think that one quarterly report, even if they miss, is going to motivate investors to remove this company as a core holding in a portfolio?
No one's saying.
This is an anchor. This is the anchor.
No one's going to say, oh, they're going to miss, you're going to sell it.
Guys, we got an update. Snowflake is up 8%. We'll go back to that clip in a bit. Snowflake is up. Wow, Snowflake's up 10%. Oh boy, that's a green candle. That's a candle that is green. That is a green candle, up 11% now. Green is what I am seeing on Snowflake. Let me pull up their numbers. If you're in Snowflake, let me know in the chat. They are green, green, green. Let's see what the numbers are. Here we go. I think I have it. So Snowflake, Oh my goodness. Holy crap. They sandbagged the crap out of their numbers. 828 million, which is up 34% year over year. Performance obligations are 5 billion, reflecting 46% year over year. Where's the stock? It's up 12% right now. And other, are they profitable yet? No, it doesn't look like they're profitable yet. It still looks like they're not profitable yet. Yeah, it still looks like they have not officially become profitable, but 34% year over year growth, and net retention rate is at 128%. Wow. Snowflake. They sandbagged the guidance. They said 22% year over year. They just brought up 34% on Snowflake. There you go. Let me get some other numbers on this one. That's good news. At least one of them went well. We want to see these data plays do well. Let me see if there's any impact on Palantir after hours or Datadog or any of these guys. Yeah, Palantir's up a little bit from this. Datadog is up about 2% from this. CrowdStrike, could that be up a little bit? CrowdStrike, yeah, all the SaaS names are getting some love because Snowflake just, even Robinhood is up a little bit after hours. Okay, so we got one thing that went okay. Snowflake, wow, up 10% after hours. Put in the chat if you own Snowflake. Prince owns 100. Oh my God, is Elf down? Did Elf go the opposite direction? Holy crap, Elf falls 12%. Wow. So for those that don't know the issue with Elf, Ulta Beauty, which is one of their main competitors, 2 months ago said, we think this year is going to be bad. That's the gist of the PR. They're like, hey, we think makeup's going to do bad this year. And so Elf dropped. Everyone thought there was a little bit of value in buying Elf because it dropped that much, and Elf is different than Ulta. Apparently, Elf's results just came out. I'll pull it up in a second. And Elf is confirming what Ulta ended up confirming, which is that makeup is not going to do that good this year. EPS of 14 cents for Snowflake versus expectations of 17 cents. So they missed on EPS, but they beat on revenue, and they're up 34% year over year, which is why Snowflake. Oh, now Snowflake's going down. Now, well, it's not as high as it was before. There was a green candle to 184. Now it's at 7%. It's at 175. So some people are taking their profits on Snowflake. Let's see how it maintains itself. Nvidia is probably going to determine both of these stocks, but Elf is now down 11%. Wow. Elf's down now year to date. Yeah, the thing, I'm going to pull up Elf's. I'm trying to find out why is makeup struggling this year. Now we saw Target that got crushed on earnings because people are not buying like basic necessities at Target anymore. Their sales are down 3% year over year. But the reason it seems like they're down is because Target's just too expensive compared to Walmart, because Walmart did great. So I don't think that's a consumer problem. I think that's a Target problem. Here's Elf. We got Elf's numbers. Let's see what Elf had to say. Again, we have Nvidia in 12 minutes. Here's what Elf had to say. Delivered $1 billion in net sales, up 77% year over year. Elf Cosmetics gained market share for the 5th consecutive year. In Q4, we grew net sales by 71%, marking our 21st consecutive quarter of net sales. $321 million of net sales. Gross margin is up to 71%. Net income was $14 million. I think Elf was profitable before this. I'm pretty sure this is not their first quarter of profitability, so I'm pretty sure they're profitable. That's interesting, dude. Net sales are up so net sales are up 70% year over year to $1 billion, but the guidance has to be what's hurting the company right now. So they expect, wow. So they expect, let's just assume 1.25. Let's do the math. 1.25 minus 1.024 divided by 1.024. Yeah, they're expecting 22% year over year growth. They're expecting 1.25 billion next year. They did 1 billion in 2024. They're expecting 22% year over year growth. This is a company that was growing closer to, well, as you can see right here, 77%. So maybe that's the issue for Elf. Maybe that's the issue. Seems like that's the problem right now. Amit, where do you track earnings? I use Webull. Webull is good. Also, earningshub.com. That's another good one. That's a free website you can use to find earnings. But Webull helps me actually look at the stock prices themselves. So Snowflake up 7%. Elf right here down 9%. Yeah, I mean, if you're slowing from 70% to 20% year over year growth, then there you go. I'm just curious why. Why are their earnings, like, why are people not buying makeup anymore? I guess that's what I'm the most curious about. Let me get some updates from CNBC on Snowflake, and then we'll get ready for Nvidia. Oh boy. All right. So Snowflake's good. Elf is bad. That's the trend that we're looking at. So let's get an update on on Snowflake. Here we go. All right. This is Alf and Snowflake. Here we go. Alf and Snowflake. Here we go.
Get some other results. We've got VF Core, Snowflake, and Synopsys out. We're going through those results. In the meantime, Julia Borston has the numbers for Elf Beauty. Julia.
That's right. Elf Beauty beating expectations in the top and bottom lines with adjusted earnings of 53 cents per share. That's higher than the 32 cents estimated. Revenues of 321 million, surpassing expectations of 292.6 million. And net sales did grow 71% year over year, which the company says was driven by strength across retailer and e-commerce channels. But take a look at that stock now, trading down 11% in after hours trading, and that is on weak guidance. The company guiding to fiscal 2025 full year revenues in a range of $1.23 to $1.25 billion. That is below the consensus of $1.27 billion. And the adjusted earnings outlook also falling short of expectations. The company giving a range of between $3.20 and $3.25 a share, well below consensus expectations rather of $3.51. Shares now down about 12% in after hours trading. John?
All right, Julia, thank you. Meanwhile, heading in the other direction, Snowflake, those earnings are up and the stock is higher. Seema Modi has those numbers. Seema.
Hey, John, while Snowflake did report a 4-cent miss on its bottom line, it did produce better than expected revenue growth of 33% year over year at $829 million, which did come ahead of Wall Street consensus. The company also outlines that it's seeing more C-suite demand, 709 Forbes Global 2000 customers versus the 691 it saw in the fourth quarter. The new CEO, Sridhar Ramaswamy, who investors are looking forward to hearing from on the earnings call, really touting the company's push into artificial intelligence, saying our core business very strong. Our AI products now generally available are generating strong customer interest. They will help our customers deliver effective and efficient AI-powered experiences faster than ever. This is the cloud data management company that brought its expectations down for 2025, which sent the stock down about 30% over the past 3 months, now getting a bit of relief here in overtime. John and Morgan.
All right. Yeah, I mean, as you mentioned before.
Oh boy. All right. So Snowflake's doing good. We have 8 minutes left, folks, until Nvidia earnings. Let's do this. Comment where you're watching from. Where are you from in the world? I always think it's super cool when we come to events like this where everyone comes together and we hope to God that we don't lose all of our money. Where are you watching from in the world? What time is it in the world where you're at? And let's just hope over the next 7 minutes, all of us together in this one moment can manifest the energy that is needed to somehow profoundly allow Nvidia to not shit the bed so that we all don't lose some money. It's been a hell of a year. I know everyone's portfolio has been relatively good unless you invested in GameStop at the top. We've had a good year, and we just need Nvidia to keep this. It's crazy, dude. We've had a good year, but we still have like 6 months left. So it's like you can't call your victory shot yet because anything could happen in 6 months, you know. And the Fed, they said we're going to keep rates as high as they are right now. So we've got so many more variables to determine this year, but Nvidia is another one of them to figure out if things go bad. All right, we got New Zealand in the house. We got Poland in the house. Switzerland, Germany, Portugal, Madagascar. That's one that's never joined the chat. I love it. Zurich, LA traffic. All right, LA traffic. I'm going to be in LA in June. We've got Norway, Tijuana, Sweden with my girlfriend. I love it. Dominican Republic, Boston, Barcelona, England, Shanghai, China, Ireland. You know what I love about Ireland, dude? You know what I love about Ireland? I love the city of Dublin because what I like to do with my money is make sure that it's always Dublin. That's what I'm talking about, baby. That's why I love Ireland. We got Thailand in the house, Dubai, London, Chi-Town, China, Boston, Israel. I love it. I love it. Miami. Oh boy. Let's see what happens. Oh boy, oh boy, oh boy, oh boy, oh boy. By the way, I used this joke already, but there's people here that are probably here for the first time today. So the chat, the OG members of the chat, we don't need to say that I've used that joke already because for the people that are here, that was an incredible joke that they heard for the first time in their life. Let them enjoy that experience. Let it sit with them because the next time they join, they're going to hear it again eventually. So their first time is always the most special. Let's get back to some NVIDIA coverage. We got 5 minutes left. Let's hear a little bit of thoughts, and then we got NVIDIA. Here we go.
I don't buy that one bit.
Absolutely.
I do think though that if they miss, the stock could go down a lot, and the Nasdaq could go down 2%.
So they get the benefit of the doubt if it goes down. And yes, the stock market will go down if there's a miss. The bear argument is simple. Forget that they have to beat. They have to beat by how much? They have to beat by an exorbitant amount. Fundamentally, the bear argument is the Blackwell chip is coming out later in the year, and you've got customers that are going to hold back on spending in anticipation of Blackwell. The problem with all of that is twofold. And the reason why I actually think tonight, I wouldn't be surprised to see the stock up 5 to 10%. From a perspective of positioning, April 19th, stock goes down 10%. On what? The expectation that chip demand is weakening. What happens subsequent to that? All of the big technology, big technology companies report. They all report and they tell you what? We're going to be spending money. Meta, Alphabet, Amazon, all coming out. They say we're spending a ton of money. Stock rallies. During that period, what do we hear from the speculative and hedge fund community? They're cutting back positions in Nvidia and other big mega cap companies. And the option market is telling you right now it's skewed towards the put side. I actually think positioning is set up the right way where this stock continues to move higher and it goes above 1,000 tonight.
Okay. Jason Snipe, we're talking about the options market implying a plus or minus 8% move.
Oh boy. All right. We got 3 minutes. Do you guys think a split's going to happen? You can put again in the chat. I know a lot of people said a split might happen. 67% of the 1,778 people that voted said that they believe there will be a pump on the YouTube poll we put out. Let me actually show you the Twitter poll. I'm going to put my Twitter in the chat. This is the Twitter poll that I did this morning. This had 1,300 votes and a little bit of the same percentage right here from Twitter. I'll put the poll as well in the chat if anyone wants to vote on that one. So 1,387 votes. We had 60% say beat and raise, 40% say dump. What I'm looking at on the YouTube poll is basically 67-33. So closer to 70-30 dump and pump. So most people think it's going to pump. And it says a huge pump is coming. Oh boy. But some people still feel that there is a potential that this thing has lofty expectations and they don't follow through. I saw a talk by Jensen Huang yesterday at the Stripe offices. They posted that on YouTube and I was watching about 20 minutes of it. And dude, he sounded relaxed. And that was a month ago. So he's probably knew, or he knows at that time how the numbers are turning out to be. Snowflake now up 6%. ELF is down 9%. And he seemed pretty relaxed, dude. He seemed like a baller. He was making jokes. He was having fun on stage. Like I don't know if a CEO is that relaxed if they think that things are going to be bad for the quarter. I don't even think they're doing that much press if they think things are going to be bad for the quarter. So I think things are going to be all right. But it's a question of how the street interprets it. Farzad, admit is too legit to quit. Shout out to Farzad. Thank you for the $4.20 super chat. Really appreciate it. Good friend of the channel. And he is the, in my opinion, best Tesla YouTube content creator on the absolute planet. So check out Farzad if you haven't. You guys probably all know Farzad, but NVIDIA also affects Tesla. Speaking of Tesla, where's Tesla right now after hours? We got 1 minute, folks. Tesla is 180, recovered a little bit. It was at 178. NVIDIA will affect the big seven, in my opinion. If NVIDIA goes up, I think Tesla, maintains its level, maybe gets a little bit of a sympathy pump. Same thing for Palantir. Palantir is indirectly affected with NVIDIA. NVIDIA creates the GPUs. The GPUs train the models. The models have to be connected via data. That's where the application layer like Palantir comes in. So all of this stuff is intertwined and connected in a way that's unimaginable. Even Microsoft, that owns 50% of OpenAI. OpenAI benefits if NVIDIA benefits. So there's so much riding on Jensen Huang. And it's up to him to see if we can execute. I can't imagine having that much pressure on me. But then again, that's why he's worth $35 billion, is because he's been able to pull this stuff off. All right, here we go. How many seconds do we have? We have 10 seconds. Okay, this is game time. This is the time. This is game time. It's going to happen. Let me make sure CNBC is pulled up and ready to go. This should be good as soon as we get the numbers. But this is now where we stare at the screen and see what happens. All right, here we go. 420. 420. I have everything I need pulled up. I'm going to try to get the numbers literally as soon as they come in. And now we wait. Financial info, quarterly results. All right. So here we go. Oh boy. Oh, it's red. It's red, a little bit red. It's a little bit, just a little. Now it's a green. Now it's a little green. Now it's a little green. We're up 1%. We're up 1%. All right. Oh, it's a green candle. It keeps going. It keeps going. It keeps going. It's up 2%. It's up 2%. It's up 2%. It's up 3%. We're up 3% right now. We're up 3%. 3.14. Oh my God. Are we going to get to 1,000? Oh boy. 980. I think that's 985. That's all-time high. I think that's an all-time high. Oh my God. Is it going to come? Is it going to come? Are we going to come? Is it actually going to come? Is it going to come to 1,000? Not that type of come. Goodness. It's going to come to 1,000. It's going to come to 1,000. 989. Oh boy. 990. Can we do it? Does it go to 997? Oh, that 1,000 is going to be psychological, dude. Oh my, look at that. They're stopping it right at 997. These freaking market makers. Oh my God. Does it happen? Does it happen? Do we break through? 990. 990. They did a split? They did a split? I don't even see the results. They did a split? I've been staring at the stock. They didn't do a split. 612 EPS. 612 EPS. 612 EPS revenue. 10-to-1 split. They did a split. Oh my God. All right. We got the numbers. We got the numbers, folks. We got the numbers. $26 billion in revenue for Nvidia. They beat 24.6 to 26. EPS 612 versus 558. They beat by about 72 cents. And it looks like they've done a 10-to-1 split. It looks like they've done a 10-to-1 split. The stock is selling off just a little bit. I mean, it was at 6%. Now it's at 4%, but it's still up. We're still up 10-to-1. 10-to-1. We've been saying for the past couple days on this show, we think they're going to do a 10 for 1. We're going to get to buy Nvidia at $100, dude. We're going to get to buy $98. It's still expensive, kind of, but holy crap, dude. Okay, let's go to CNBC. Let's go to CNBC. Oh my God. Oh my God. Here we go. We are here. It is happening, folks. This is good. This is what we wanted. $26 billion. Are you kidding? $26 billion. Holy crap. The expectations used to be 22. Now they were 24, but this is what we go. We got it. All right, here we go.
Drive the stock market. It's not going to be significant. I think in the short run, their earnings through these network dives.
Christina, how does it look?
Bottom line, $6.12, which is a beat for Q1 on revenues of $26.04 billion. So stronger than the estimate. Also matching the boogie number, the whisper number at $26 billion. And I'd like to point out so far with data center revenue, also a beat, $22.6 billion, higher than what the street was anticipating. And I'm going through the report, but one line stands out. The next industrial revolution has become, and they're going on about talking about the data center growth fueled by strong and accelerating demand for Gen AI, as we know. So we'll get back to you on all the numbers, but top and bottom line beat so far.
All right. So Patrick Moorhead.
Okay, we got some numbers. I'm getting up a little bit of the slides. I believe, here we go. We got the slide right here. This is the big slide, and then we'll get into the numbers. Congrats, everybody. NVIDIA's up. This was a phenomenal quarter. $26 billion is insanity. It's up 5%. If the call goes well, this sucker should be over $1,000. Now it's really running $994. $994. It gets stuck at that 1,000 level. That's really psychological. Palantir is up 1% after hours with it. Robinhood is up about 0.5% after hours. Snowflake currently on these NVIDIA results is up 7%. And ELF is still down. ELF is still down 9%. Okay, so this is the breakdown of the slides. We got the call in about 30 minutes. Data center, $22.56 billion. That's insane, man. Gaming, $2 billion. Professional visualization, $427 million. Auto, $329 million. OEM, $78 million. 26 total billion. Last quarter, they did 22 billion. So data center is up 4 billion, which makes up the majority of the actual revenue beat from 22 to 26 billion dollars. And we've got the stock split as well. I'm trying to get the actual PR by Nvidia so we can read what they had to say. But this is what we've been looking for. I mean, this is what we wanted to see, and this is what we're getting. Seems like what we're getting right now is what we wanted. This slide is incredible. As you can see, a year ago, which was Q1, we were doing 4 billion in data center. Now it's doing 22 billion. Revenue a year ago was 7 billion. Now it is 26 billion. I'm going to try to get the press release, and we'll watch this and then keep going from there.
I'm going to go back to you on this. We got a Go ahead.
And a 10-for-1 stock split that I just read right now. Also announcing a 10-for-1 forward stock split of common stock to make ownership more accessible to employees and investors. The split will be effective through an amendment to NVIDIA's restated, scan through June 6th. So as of the close on Thursday, June 6th, they'll get 9 additional shares of common stock. So again, 10-for-1 forward stock split at the close on June 6th.
All right, Christina Partsinevelos, thanks for bringing us those initial headlines. Patrick, I'm going to go back to you. Data center beat $22.6 billion, higher than expectations. Revenue overall higher than expectations, or at least it seems like meeting the whisper number. I mean, we went into this.
Okay, guys, I got the press release. Oh my goodness, 10 for 1 on June 7th. So here you go. Revenue $26 billion, up 18% from Q4, up 262% from a year ago. They just went up 262% year over year. We are all alive while one of the greatest companies of our lifetimes is executing at the highest of levels. This is just absolutely incredible. Record quarterly data center revenue to $22.6 billion, up 23%. 10 for 1 forward stock split. We've been talking about this a lot on the channel, that this would really make it exciting. Some people were saying 4 for 1, 5 for 1. I think at $100 a share, I mean, it just gets, it, as they said, it makes it feel more accessible, even if it's not literally accessible, right? But there you go, 10 for 1 stock split. Or it's not literally cheaper, but it is a bit more accessible to buy $100 stock versus $1,000 stock. There you go, 10 for 1 stock split, June 7th. And then quarterly cash dividend was raised as well. So you're going to get 1 cent per share. It's not that crazy, but it is up 150% based on the share splits. GAAP earnings diluted per share was $5.98. Non-GAAP was $6.12. Jensen says the next industrial revolution has begun. Companies and countries are partnering with Nvidia to shift the trillion-dollar traditional data centers to accelerated computing and build for a new type of data center. AI factories to produce a new commodity, AI. AI will bring significant productivity gains to nearly every industry and help companies be more cost and energy efficient while expanding our revenue opportunities. Our data center growth was fueled by strong and accelerating demand for generative AI training and inference on the Hopper platform. They talked about that at the GTC event. Beyond cloud service providers, generative AI is expanded to consumer internet companies and enterprise sovereign AI. Sovereign AI is like actual governments, automotive and healthcare customers, creating multiple multi-billion-dollar vertical markets for Nvidia. Okay, let's look at the results. So this is what we're looking at right here. This is what we're looking at. Wow. Absolutely incredible. Revenue is up 262%. Gross margins are up 12% year over year. Operating expenses are up 43%. So OpEx did go up actually. Last year or last quarter was up a little bit less than that, but that's up 43%. Operating income up 492%. Net income, they did $15.2 billion in profit off of $26 billion in revenue, which means these guys have a net income margin of 58%. 58% of every dollar, they keep 58 cents for that, or that becomes actual profits for Nvidia. Diluted earnings per share, $6.12 on Nvidia. That's up 461%. These numbers are insanity. These numbers are absolute insanity. Okay, next quarter. Wow. $28 billion. What the fuck? $28 billion. It's dropping right now. Is it down after hours? Okay, let me read a little bit of this, then we'll go to the stock. Revenue, $28 billion. I think that's the guidance. I still think that keeps them up 200% year over year. I might be wrong on that, but that's still amazing. GAAP margin 74%. That's fine. Non-GAAP expenses $4 billion. That's fine as well. And highlights. Then they show the data center highlights. All right, we'll go back to this press release in a bit. Let's go to the stock. Is the stock struggling a little bit? Nvidia is alpha still down. Nvidia's up 2%. Okay, so it's still up. It's just not up as much as we want it to be up. The good thing is if you sold puts on this, like TJ and I did, maybe we don't dump, which means NVDL. We sold puts on NVDL. That probably maintains some of its momentum. Now we'll see after the call, and we'll see tomorrow on the market open what happens. But if you sold some puts as an option strategy, that's not bad. If you bought calls for like a massive 10% pump, might not end up getting there this Friday if this thing doesn't keep going higher. It's still up 1%. The good thing is they didn't crap the bed. Forget the stock. They didn't crap the bed, which means AI is real. It's not super cyclical yet, even if it becomes super cyclical in a year or two. The demand is there. They're going to do $28 billion next quarter, so they're keeping the guidance relatively strong. And it seems like the market can continue to do what it needs to do. Where's the S&P 500? S&P is at S&P is at 529, so slightly down after hours. Someone said they sold credit spreads at 830. That's not bad either. If you have the right strikes at 945 strike, not horrible on those credit spreads. And then the QQQ is up after hours. Yeah, it's not bad. Yeah, Theta gang. If you sold some options, you're hopefully going to benefit off Theta now that Nvidia is doing is not absolutely tanking, but it depends on what it looks like tomorrow. Up 2.6%. I mean, dude, even moving 2% is what? How much? 10%. Moving 2% is close to about $20 billion in market cap. So it's not like a small move on Nvidia. So, I mean, 2% is a lot at the end of the day for Nvidia. Snowflake right here. Where's Snowflake? Snowflake is still up 4% on the day. Okay, I'll pull up the Snowflake results. Let's get some more coverage on Nvidia. And then we got the call in 30 minutes. And we'll see what Jensen has to say.
Report expecting a third consecutive quarter of 200% plus revenue growth, expecting 243% plus revenue growth. We've just topped that. How does it speak to what you were saying to us earlier about where we are in this cycle?
Yeah, so it aligns perfectly with what I said, which is the demand is off the rails in the hyperscalers, and they just want more and more, and that's shifted to their new platform, upcoming platform, Blackwell, which isn't shipping yet, but will ship. And that demand is now going to the data centers that aren't necessarily connected to the hyperscalers, like Lenovo, Dell, and HPE and Cisco. And so this increased insatiable demand to work on generative AI models continues, and I believe it will continue at least for the next year.
Okay, our Christina Partinella is doing a great job scrambling on that news as it was crossing. Barbara, and I want to go to you now. NVIDIA is close to being a $1,000 a share stock right now after market. Shareholders of record as of Thursday, June 6th, are going to get 9 additional shares of common stock. We'll actually see the split adjusted price reflected Monday, June 10th. How does this make you feel about being a long-term holder of this stock? And given the accessibility that stock splits normally give to shareholders, does that factor in at all? Or given that, you know, Robinhood and SoFi and like all of these fractional shares are common right now, does it not matter as much as it used to?
Well, actually, I think it does still matter. It shouldn't, you know, arithmetically, but it does. I mean, it does open up to a lot of retail investors who, you know, if they could afford two shares, it doesn't seem worth it. So I think that is delightful news that they're on top of the good fundamental news. And also what I think you're seeing in the aftermarket right here, there's a lot of momentum traders. There's a lot of trading going on. And I think tomorrow when the market opens, you know, you're going to see a lot of retail traders, you know, leaping aboard. 10-for-1 stock split like you had with Chipotle. They announced what was it, 50-1, you know, and then that stock just, you know, kept moving ahead, even though it's expensive. You know, after their earnings, they announced the stock split. It was very positive for the name. So yeah. I think this will be too.
Okay. I want to bring Mike Santolian to this conversation. I mean, we're starting to see some of the other.
Again, the people that say it doesn't matter, it makes options a bit more easier to just like psychologically buy, betting that Nvidia will get to like 130 versus like 1,030. I know maybe that doesn't make a lot of sense, but that's just how the general, you know, public feels about that, especially retail investors, which will drive volatility in the options market. And I mean, you know, if someone can own 10 shares of Nvidia at $1,000 versus 1 share, it makes them feel like they own more. You know, it's just so there might be more money coming into the system as a result of that. Maybe not substantially, but it is something that makes it seem more accessible. And that's what they're doing here with this 10-for-1 split.
AI plays trade higher in sympathy right now as I go through. Even Intel's up fractionally, AMD, Supermicro is trading higher, Mike. But just to go back to the stock split, what does this do to make Nvidia now a contender for the Dow?
You know, it obviously would put it in the zone if the Dow committee were so inclined to try and add another company of this size. It's pretty conspicuous how big it is and not being part of the Dow. I don't know that that's necessarily something either that's the motivation of NVIDIA or that they're necessarily seeing getting itchy to do. They just recently added Amazon. I'm sure they feel as if they're participating enough in that. To me, it's more just a soft gesture of management confidence on some level, and then you take them for their word that for employees, it actually does matter. If you're compensated to a large degree in shares, it matters if you can just peel off small bits of it and sell some into the market. Walmart did something similar on that basis too. So to me, it's more of a little enhancement to the overall story. The fact that the stock is only up 4%, I also would, strangely enough, take as a positive, because it shows a certain level of maturity and predictability. The forward guidance looks okay. Now, who knows? They could say.
I actually agree with that, dude. If the stock was at 1,000 on these earnings, I don't think it wouldn't be unbelievable. But the fact that it's actually a bit tame, it means that this market's not 2021 where money's just sloshing around like crazy. It means there is a little bit of discipline here, which is important because we're only 5 months into the year. We want to end the year at the S&P around 550, 560, you know, if we can actually get there. And to do that, we need to take our time slowly to get there, not just get it all in one day.
Wonderful things or scary things on the call and gets the stock moving in a different direction. But I think that's a pretty good thing to hold the recent gains up 4%. And what really has happened to the market based on this huge AI boom that's being funneled through NVIDIA largely is that all the companies buying from NVIDIA, right? So it's Microsoft, it's Amazon, it's Meta, it's Alphabet. They would otherwise have been retaining those earnings mostly. So it was kind of inert cash for the investor in the S&P 500. And now it's getting funneled through NVIDIA in the form of profits. And it's helping out kind of lubricate the system in that way and obviously add to aggregate reported profitability. So, the system's working for the moment.
I hear you on the 4.
Now, we'll talk a little bit more and then we'll get back to that. Jeremy says, but the stock moves so much slower with the stock split. That is correct. There's 2.5 billion shares outstanding for NVIDIA, 10 for 1. There's going to be 25 billion shares. So unless the volume increases with the amount of shares, then there's not going to be that much movement in the stock because you need a lot of people trading it at the end of the day for it to go up or down. Now, more people will probably trade because it's more accessible to people, but it might make the stock move a bit more slower now. It's kind of like Apple, dude. Apple, I think, has like 7.4 billion shares outstanding because Apple is, no, even more than that, I think. But Apple has done so many splits for the past 20 years. So it doesn't move that. That's why if it moves a couple percent up or down, it's a big deal. So we got NVIDIA here up 2.4%. It's green. It's a solid green candle. We tried to get at 997, and then we got some blue balls, and we got us right back here down to 971. I think if Jensen has a good call, there's a shot this thing can tick higher, but initial reaction seems to be pretty set at this up 2% range. It's not down, which is good. It's not down, which means tomorrow, if people decide to buy in, maybe we see closer to 990. If not, then maybe we stay flat or we fall back to 950, which is where we were today, right? So it's not going to be too hard to see NVIDIA coming a little bit down. If people end up taking some profits tomorrow. S&P at 529, QQQ at 455. Again, the Fed minutes came out today, and the Fed presidents say that inflation's a lot stickier than we thought. They've been saying this for the past 3 months now. I think Jay Powell knows that shelter disinflation is coming pretty soon. Oil prices are down another 1% today. So I think that rate cut is coming. It's just a question of the Fed kind of signaling for when it's going to come. And maybe the Fed feels that we should be a little bit hawkish right now and get the markets to cool down. And eventually that rate cut will come in July or September. And if NVIDIA has another good Q2, then the end of the year might not be that bad. Okay, let's read a little bit more from what Jensen Huang said. We are poised for our next wave of growth. The Blackwell platform is in full production and forms the foundation of the trillion parameter scale generative AI. Spectrum X opens a brand new market for us to bring large scale AI to Ethernet only data centers. And NVIDIA NIM is our new software offering that delivers enterprise grade optimized generative AI to run on CUDA everywhere, from the cloud to on-prem data centers to RTX AI PCs through our expansive network of ecosystem partners. Then they did this 10-for-1 split to make stock ownership more accessible to employees and investors. They increased their cash dividend as well from 4 cents a share to 10 cents per share, and that will be 1 cent per share based on the post-split basis. And then there you go. You got a revenue of $26 billion for NVIDIA. Absolutely insane. Absolutely insane. Skippy says, I don't understand any of this. All you need to understand is that NVIDIA crushed it. And because they crushed it, the markets hopefully can benefit from that.
But last quarter, NVIDIA did move a lot in the back half of the 4 o'clock Eastern hour, and then during the call as well. So we'll see about that. Let's get back to our Christina Partsinevelos for more on NVIDIA's guide. Christina.
Yeah, so for Q2 revenue guidance is coming in at $28 billion. So again, if we talk about this buy-side boogie whisper number, that was spot on what the street was anticipating at $28 billion. I'd like to point out if we're going to go for categories. So we talked about data center revenue coming in at 22.6. Stronger gaming was 2.6, so relatively in line. Pro Viz, that category was actually a little bit lower at 427 million, so lower than the street. Robotics and auto, surprisingly a little bit higher, $329 million. So some strength there. And then I know gross margins, the company has talked about it peaking this particular quarter. They're guiding for gross margins to be between 74.8 and 75.5. Kind of alluding to what the CFO and CEO have said in the past, that it will eventually hit mid-70s. So again, pretty much hitting on the park on the dot on all of their promises thus far. But we'll see what they say in regards to momentum going forward in the Blackwell chip.
Stephanie, thank you, Christina Partsinevelos. Stephanie Link, I am not picking on you for not owning NVIDIA. No, you have not missed the AI trade, but for a lot of investors are going to be thinking about, okay, at 100 roughly bucks a share, maybe a little less pretty soon next week. Well, no, a couple weeks from now, should I buy this at this point? So what's your calculus? At what point, despite how expensive NVIDIA might seem, do you go, all right, well, I believe in this AI trade. So yeah, even though it looks a little expensive, I'm going to own it.
Well, I happen to own Snowflake, and that's an AI play as well. So, and that's up a lot more because the expectations were a lot less. NVIDIA, it's interesting that it is only up about 4%, but we'll have to hear about the call. All the things that were said, all of these things are very, very positive. But expectations were for that they were going to beat by $1 billion to $2 billion on revenues, and that they would guide about $1 billion higher. All that kind of came to fruition, which is good. But it was kind of the whisper and kind of expected.
And she's right about that, dude. Last week, revenue expectations were 22 billion. They just put up 26 billion. But by this morning, it changed to 24 billion. So if those expectations stayed the same, it would have been a $4 billion beat. But the market always knows. So they increase the expectations and then they decrease the surprise of NVIDIA's earnings, which means the beat is not that impressive, right? Versus a 4 billion beat to a 2 billion beat. Still an incredible beat, but the market is figuring out that NVIDIA is going to keep doing well. And that's why we're seeing them with at least up 2% after hours.
The biggest piece, obviously, data center. That's a lovely number, a 22.6 billion. That's 27% year-over-year growth. That's incredible. I definitely think that that's why people are in it. We don't necessarily care about the other segments, and I think spins and splits work in general. So that's why I think the stock certainly could be interesting to some. I have plenty of other AI exposure, John, and I like them better. And we talked about the other two, and then Snowflake.
I'm not trying to sell it
to be honest with you, that one was better than expected.
Yeah.
Well, it's all about, look, it's all about diversification, and it's all about trying to play the same themes just with different names that are maybe less popular. And that's all. Nothing wrong with NVIDIA at all. And congratulations to those that own it. I just think that there are other ways you can win as well.
Yeah, and I mean, if I keep sticking with that theme, Patrick, I mean, as we mentioned, there are a number of other AI plays that are trading higher in sympathy right now. That being said, NVIDIA 2.5% move higher, so we're faded the gains from the initial pop here. How much do gross margins in the guidance we got there? How much does that matter?
I mean, profitability here is on the gross margin side is exceptional. And I think what it shows is that even though NVIDIA was talking about potentially lowering prices on some of their future chips, they've been able to hold pricing power here. And it also shows that whether it's competition from AMD or Intel, or even some of the pressure that they're getting from the hyperscalers developing their own chips, is not necessarily coming into play and hurting gross margins. So it's a very positive sign. Now, we haven't seen the Blackwell effect yet, and if we're going to see gross margins change, it would be when it starts shipping later on this year.
Okay. Well, thank you to our panel.
Let's see what Twitter's saying and what Twitter is talking about. So I just tweeted this. Let's see how Twitter is reacting to the fact that we had a good earnings for NVIDIA. So what did I tweet? I said, all right, NVIDIA does a 10-for-1 stock split. What do we say? Market is about to get very greedy. There you go. People are excited again and again for selling options and selling contracts. There you go, where you're going to be able to sell them a bit more easily and potentially generate more premium because more people are playing in these options. Yeah, there we go. There we go. Pretty sure this is a future $400 to $600 stock post split. If we get to 100 and then it gets up to 400 or 500, that's a 5x from that $100 level. That's basically $5-6 trillion, which is insane. Look at that. People are saying buying June 6th. Can't wait. So people are already getting ready to buy just for the dude. If you have even 5 shares, you get 50 shares. I know it's stupid, but like it kind of feels cool to have 50 shares. If you have 10 shares, you get 100 shares, dude. And so there you go. We got the stock split here on NVIDIA. I tweeted this meme 2 days ago. By the way, Vivek Ramaswamy invested in BuzzFeed today, so that was interesting news. But this is what this is the GIF I put out. Where's the GIF about the stock split? And oh, here it is. Here it is. And if NVIDIA would do it, and it looks like they realize this time right here. Jensen needs to whisper one word to get NVIDIA above 1,000, which is split. Now, does it get us over 1,000? I don't know. That's going to be the tough one to see. But if it does, it's going to be exciting. Here's Jensen actually talking a little bit about sovereign AI, which is one of the things he mentioned in his press release yesterday at a meeting and with Dell CEO as well.
It's coming. You know, Jensen and I spent a lot of time talking about this and how it's expanding out. And, you know, we're seeing, you saw an example from South Korea on stage, yes, right, with Samsung. You see this in the Middle East. You see it in sovereign AIs that are being built up. And, you know, for a country to encapsulate its own culture and language and beliefs, that's happening in every country in the world.
Well, Jensen, you and I have discussed sovereign AI in the past. You know, some recent use being Japan as an example. But I go back to my same question about the durability of this market, moving beyond the hyperscalers to see big commitments at the nation-state level. Again, is today's news an indication that happens because of AI factories, or are they running two separate paths?
No country can afford to outsource its intelligence on first principles. Every country has its native natural resource called its language, its culture, its intelligence. And now people realize that because their country's data is part of their natural resource, not just the copper mines and the gold or, you know, the lithium or whatever it is, it's also the data is also part of their natural resource. And they have to make sure that they harness that natural resource and transfer it into artificial intelligence.
Jensen Huang is 61 years old, and he must be having the time of his life, dude. He must be having the time of his life. NVIDIA right here, 985. A little bit of momentum. I mean, dude, I don't think there's a reason it shouldn't get over 1,000. These earnings are phenomenal. I don't see any red flags in the earnings. I don't think any of the analysts, at least so far, are seeing red flags. Forward guidance is incredible. So if anyone sees any red flags, let me know. But I'm not seeing the red flags that are making it super scary, or that are saying, oh, well, you know, this is a short-term pump, but it's going to get eaten up. It looks like this is a good quarter. It looks like next quarter is going to be good. And for us to have a successful 2024, like, we just have to end the year. So we have two more quarters, Q2 and Q3, correctly. We've got the August quarter, and then we've got the November quarter. So every company has to be given the multiples that we're trading at currently on the market. We have to grow earnings, and NVIDIA has to execute for the next two quarters. And then in 2025, maybe we take a little bit of a breather. But even then, I think we're still going to be okay. So we've got a long time left for this story to play out, which is why if we do fall a little bit, it's a buy the dip, given these numbers are going to be good. But when you're going to do $28 billion in revenue in one quarter, dude, like what's his name? Google did like 80 billion last quarter, 78 billion. NVIDIA is doing almost a third of what Google's doing. And NVIDIA is, you know, NVIDIA is valued a little bit more than them on a market cap basis, but no one thought a year ago NVIDIA would be doing the numbers that Google's doing right now, or Microsoft's doing. So if they can just keep executing the next few quarters, this is going to get fun. This is going to get pretty damn excited towards the end of the year. Yeah, we got 12 minutes till Jensen. So Jensen will be talking in 12 minutes. I've got the call loaded up, and then we'll be able to hear what he has to say. Snowflake right now after hours. Let's actually pull up those results. Snowflake is up 5%. Let me pull up Snowflake's IR. Let's take a look at that. Thank you, everybody, for being here. It really means a lot to me. I appreciate it. If you're new to the channel, we do a market open and market close every single day. My version of, I guess, the new version of CNBC, my own interesting, hopefully exciting, entertaining take on the market by someone who loves analyzing it. So if you're here and you're new here every day, we will be analyzing the market every single day. And the OG members of the chat will support me right now by saying it's the funniest show on the planet. Because I am a pretty funny guy. So OG members of the chat, please make sure to validate my statements now. Product revenue, $789 million for the first quarter, 34% year-over-year growth. That crushed the 22% year-over-year growth projections that they gave. 485 customers that are giving you revenue of $1 million, 709 Forbes Global 2000 customers, and remaining performance obligations of $5 billion, representing 46% year-over-year. Oh, the overall revenue was $828 million. Oh, so only product revenue is $728, but they put up another $30 million, probably in subscription revenues, up 33% year over year. Net revenue retention, 128%. CEO says we finished our first quarter with strong performance across many of our key metrics. Product revenue was up 34% year over year. RPO was at $5 billion, up 46% year over year. Our core business is very strong. Our AI products now generally available are generating strong customer interest. They will help our customers deliver effective and efficient AI-powered experiences faster than ever. There you go. Snowflakes did its thing. I'm happy the chat is actually backing me up on the funny claim. I expected everyone to be like, he's actually not funny. Don't believe him right here. But no, you guys are leaning towards the funniness. It's growing on you, is what I'll say. You know, if I did this a month ago, everyone would be like, no, he's lying. Now it's like, actually, no, he's kind of fucking funny. This guy's a fucking comedian right here. Someone says now they'll have 4,000 NVIDIA shares. Dude, that's gonna be so fun. I kind of feel like buying a share just to have 10 shares before the split, even though I know it's like, you know, it's just, I mean, you could still argue it's cheap. The PE, I think, is going to compress given the guidance for Q2. The question is just how much juice is there left at a $2.4 trillion market cap, but it doesn't look like it's slowing down. Doesn't look like it's slowing down. All right, let's get a little bit more coverage on NVIDIA. We got 9 minutes, and then we got the call.
We did see them beat on the top and bottom lines and come in much stronger on some of those key metrics like data center. Obviously, we just talked about the gross margin and other metrics for the guide as well.
Yeah, no, thanks for having me. So as far as the results are concerned, I mean, I think that it's just probably as good as you wanted it to be. I mean, you didn't want the numbers to be too hot, but you wanted them to be better than expected. And that's exactly what you kind of got this quarter. So we're perfectly happy with that. I mean, they did announce a number of other things like an increase in the dividend as well as you know, the stock split and what have you. But as far as kind of the fundamentals are concerned, and the results for the April quarter and July quarter guide, data center numbers continue to drive this business, and that continues to look promising. So all in all, I'd say, you know, we're pretty happy with the number. I'd say as far as gross margins are concerned, yes, they outperformed during the quarter, but when you kind of look at the guide, relatively in line to expectations. And when we kind of look at, you know, the back half of the calendar year here, we do expect it to kind of be, you know, more modest in nature. So call it, you know, mid-70s range. So as far as, again, that guide was concerned, relatively in line with expectations.
Angelo, as the AI story kind of matures, we've been talking for several quarters now about how some people are saying, well, more of this compute is moving to the edge. It's moving away from the data center. We're seeing Qualcomm talking about that. We were just seeing Microsoft talk about that with Qualcomm and about others with the Copilot Plus announcement. There's also rumblings that Nvidia is going to participate even more at the edge, perhaps on the CPU.
Guys, ELF just came back. We'll go back to that in a second, but ELF, wow, holy crap. ELF just came back. ELF was down 10%. Now it's down 1.7. Wow. ELF came back. People bought the makeup. Interesting. I mean, 10% was probably a little bit of an overreaction, even I thought, but wow, ELF is actually okay. NVIDIA right here up 4%, 986. I think this sucker wants to go above 1,000, dude. Now, we saw this last time. Remember, it went to 680, then it was at like 740 on the earnings, and then it jumped up to 900 over the next 2 days. I don't know, man. I think we get to 1,000. I think there's no reason fundamentally it shouldn't, outside of people just wanting to take profits, but I don't think any of the numbers were that bad. Where's TSM after hours? Yeah, let's look at, we didn't even check AMD. AMD is up 1.1%. Okay. TSM is up 1.45. Let's go to the other semis. We have the semis playlist. Qualcomm's up a little bit. TSM's up. Marvell's up. ARM is up 1.22%. ASML's up. ON is up. Intel's up. SMCI is up 2%. SMCI below $900. AMD and then NVIDIA here up 4% on the day. There you go. There you go. Not bad at all. Not bad at all. SMCI here up 2.808%. All right. Let's get back to the coverage. And then we got this call in 5 minutes, and it's up to Jensen to keep getting us higher.
Side with chips later. How do you see NVIDIA positioned as the AI story broadens out to laptops and such devices?
Yeah, no, I think that's a great question. So when we think about NVIDIA, I think what's great about the story is they've got so many levers to this story long term. And we kind of look at over the next kind of 3 to 5 years and even over the next decade, to your point, you know, kind of on-device edge computing is going to be a huge part of the story, not only for, you know, the Qualcomms of the world, which, you know, are clearly seeing kind of a nice inflection now, but also the Nvidias of the world. I mean, I think you kind of look at their auto business, still small in nature. We think that's going to be a multi-billion-dollar business here over the next couple of years. And, you also alluded to laptops. I think when you start thinking about kind of the entire industrial revolution that kind of NVIDIA alluded to, I mean, these GPUs are going to be in all these type of devices out there. So that's a critical part of this, story for NVIDIA, longer term in nature. I'd say as you kind of, think about also the data center business here, yes, it's maturing in terms of kind of, the run rate in terms of the revenue, year-over-year revenue rates have to kind of start to decelerate. But that said, I mean, we do think there's this kind of AI war in the clouds going on, and we do continue to see upside potential to where some of the capital intensity rates are for a number of these kind of mega cap tech companies, specifically on the cloud and the digital ad side of things. And don't forget the whole sovereign AI story, which it'll be interesting to kind of see, how if Jensen Huang kind of talks about that, on this call, because that provides further kind of validation to the long-term story of this company.
Yeah, and that's exactly where I was going with you, Angelo, because I remember last quarter, we'll call it a couple of quarters ago, you've had the Commerce Department. I just spoke to, Secretary Raimondo earlier today on CNBC. I asked her about export controls, which we know have affected NVIDIA and other semi names as well, whether she felt like they have gone far enough. She said they're continuously assessing that. It had been a large piece of revenue, China had been for NVIDIA. They've been de-risking that. The fact that it's not front and center as a metric in this earnings report tells us what?
Yeah, I think you kind of hit it.
Thank you for the $20 super chat, investing guru. Really appreciate it, man. Thank you for the $20 super chat. Love your content, always top notch. Appreciate you guys here. Means the world. 3 minutes, and then we got Jensen Huang, and we'll see what he has to say about this quarter. NVIDIA up 4% right now.
You said that they've kind of been de-risking, that part of the business here. It'll be interesting to kind of see what they have to say about China. Listen, China's the second biggest market out there. So you do want that to be an open market here for NVIDIA longer term. I think it improves kind of the long-term trajectory for this company if they can participate even more than they currently are within the China market. But I think you kind of, hit the nail on the head when you kind of said, hey, listen, they've de-risked from this story. It's not, it's not 20 to 25% of their data center business. It's closer to a single-digit pace. But that said, we now see it as more of a potential opportunity if they are allowed to continue to open up that market there. But maybe to your point, at this point in time, it's one of those things where it's not kind of a central kind of thesis to our story. But the hope is potentially it could kind of come back a little bit.
All right, folks, we got 2 minutes for this call. Oh my goodness, this is going to be exciting. This is going to be so exciting to see what he has to say. Put in the chat if you have any food with you, if you're eating anything, drinking anything, as we listen to Jensen say what he has to say, and hopefully continue to explain to people that this is going to be an incredible year for NVIDIA. It's time. It's time. Yes, I said super chat instead of super chat. If you're new to the chat for the first time today and you join the streams every morning, you're going to get used to some mispronunciations. It's also crazy because legitimately I did debate in high school, right? And I was like national champion. So I was like, I was good at communication, but when it comes to the YouTube chat, I can't speak. It's like easy words are just turned into very difficult words to say. I don't know what I don't know. But we are here and we're going to be here every day covering what we've got. We got popcorn with Ryan Carlson. That's great. Bacon and eggs. We got steak and chips. Andy Capp's hot fries. Oh, those are incredible. Those are incredible. Andy Capp's hot fries are look, I was about to say the gayest. I meant to say the greatest, dude. See, if you're new to the chat, you're seeing this in real time. I was about to say they're the gayest fries ever. No, they're the greatest fries ever. I don't know what happens, dude. Like, these are the Andy Capp's hot fries. These are the best fries ever. These are the best chips ever. They're the best chips ever. They're the best. I am gay for Andy Capp's hot fries, which just means happy. Okay, it just means happy. So that's all it means. Drinking the tears of NVIDIA shorts. Yeah, there were so many people on Twitter who was like, NVIDIA is going to collapse. It's like, dude, do you guys even read what's happening in the world? Do you guys know about GPT-5? Do you guys know about Sora? Do you know about the fact that Credit Karma launched the chatbot, and all of that goes back to NVIDIA's bottom line because they're the ones training the models for Credit Karma? This game is not stopping anytime soon, and it's going to be pretty damn exciting over the next few months to see where it goes. All right, I think we're starting. Here we go. Should be starting in about 10 seconds. And we will hear Jensen.
Good afternoon. My name is Regina, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's first quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. Simona Jankowski, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the first quarter of fiscal 2025. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the second quarter of fiscal 2025. The content of today's call is NVIDIA's property. It can be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, May 22nd, 2024, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. Let me highlight some upcoming events. On Sunday, June 2nd, ahead of the Computex Technology Trade Show in Taiwan, Jensen will deliver a keynote which will be held in person in Taipei, as well as streamed live. And on June 5th, we will present at the Bank of America Technology Conference in San Francisco. With that, let me turn the call over to Colette.
Thanks, Simona. Q1 was another record quarter. Revenue of $26 billion was up 18% sequentially and up 262% year on year, and well above our outlook of $24 billion. Starting with data center. Data center revenue of $22.6 billion was a record, up 23% sequentially and up 427% year on year, driven by continued strong demand for the NVIDIA Hopper GPU computing platform. Compute revenue grew more than 5x, and networking revenue more than 3x from last year. Strong sequential data center growth was driven by all customer types, led by enterprise and consumer internet companies. Large cloud providers continue to drive strong growth as they deploy and ramp NVIDIA AI infrastructure at scale and represented the mid-40s as a percentage of our data center revenue. Training and inferencing AI on NVIDIA CUDA is driving meaningful acceleration in cloud rental revenue growth, delivering an immediate and strong return on cloud providers' investment. For every $1 spent on NVIDIA AI infrastructure, cloud providers have an opportunity to earn $5 in GPU instant hosting revenue over 4 years. NVIDIA's rich software stack and ecosystem and tight integration with cloud providers makes it easy for end customers to get up and running on NVIDIA GPU instances in the public cloud. For cloud rental customers, NVIDIA GPUs offer the best time to train models, the lowest cost to train models, and the lowest cost to inference large language models. For public cloud providers, NVIDIA brings customers to their cloud, driving revenue growth and returns on their infrastructure investments. Leading LLM companies such as OpenAI, Adept, Anthropic, Character AI, Cohere, Databricks, DeepMind, Meta, Mistral, xAI, and many others are building on NVIDIA AI in the cloud. Enterprises drove strong sequential growth in data center this quarter, We supported Tesla's expansion of their training AI cluster to 35,000 H100 GPUs. Their use of NVIDIA AI infrastructure paved the way for the breakthrough performance of FSD version 12, their latest autonomous driving software based on vision. Video transformers, while consuming significantly more computing, are enabling dramatically better autonomous driving capabilities and propelling significant growth for NVIDIA AI infrastructure across the automotive industry. We expect automotive to be our largest enterprise vertical within data center this year, driving a multi-billion revenue opportunity across on-prem and cloud consumption. Consumer internet companies are also a strong growth vertical. A big highlight this quarter was Meta's announcement of Llama 3, their latest large language model, which was trained on a cluster of 24,000 H100 GPUs. Llama 3 powers Meta AI, a new AI assistant available on Facebook, Instagram, WhatsApp, and Messenger. Llama 3 is openly available and has kickstarted a wave of AI development across industries. As generative AI makes its way into more consumer internet applications, we expect to see continued growth opportunities as inference scales both with model complexity as well as with the number of users and number of queries per user, driving much more demand for AI compute. In our trailing 4 quarters, we estimate that inference drove about 40% of our data center revenue. Both training and inference are growing significantly. Large clusters like the ones built by Meta and Tesla are examples of the essential infrastructure for AI production, what we refer to as AI factories. These next-generation data centers host advanced, full-stack accelerated computing platforms where the data comes in and intelligence comes out. In Q1, we worked with over 100 customers building AI factories ranging in size from hundreds to tens of thousands of GPUs, with some reaching 100,000 GPUs. From a geographic perspective, data center revenue continues to diversify as countries around the world invest in sovereign AI. Sovereign AI refers to a nation's capabilities to produce artificial intelligence using its own infrastructure, data, workforce, and business networks. Nations are building up domestic computing capacity through various models. Some are procuring and operating sovereign AI clouds in collaboration with state-owned telecommunication providers or utilities. Others are sponsoring local cloud partners to provide a shared AI computing platform for public and private sector use. For example, Japan plans to invest more than $740 million in key digital infrastructure providers, including KDDI, Sakura Internet, and SoftBank, to build out the nation's sovereign AI infrastructure. France-based Scaleway, a subsidiary of the Iliad Group, is building Europe's most powerful cloud-native AI supercomputer. In Italy, Swisscom Group will build the nation's first and most powerful NVIDIA DTX-powered supercomputer to develop the first LLM natively trained in the Italian language. And in Singapore, the National Supercomputer Center is getting upgraded with NVIDIA Hopper GPUs, while Singtel is building NVIDIA's accelerated AI factories across Southeast Asia. NVIDIA's ability to offer end-to-end compute to networking technologies, full-stack software, AI expertise, and rich ecosystem of partners and customers allows sovereign AI and regional cloud providers to jumpstart their country's AI ambitions. From nothing the previous year, we believe sovereign AI revenue can approach the high single-digit billions this year. The importance of AI has caught the attention of every nation. We ramped new products designed specifically for China that don't require an export control license. Our data center revenue in China is down significantly from the level prior to the imposition of the new export control restrictions in October. We expect the market in China to remain very competitive going forward. From a product perspective, the vast majority of compute revenue was driven by our Hopper GPU architecture. Demand for Hopper during the quarter continued to increase. Thanks to CUDA algorithm innovations, we've been able to accelerate LLM inference on H100 by up to 3x, which can translate to a 3x cost reduction for serving popular models like Llama 3. We started sampling the H200 in Q1 and are currently in production with shipments on track for Q2. The first H200 system was delivered by Jensen to Sam Altman and the team at OpenAI and powered their amazing GPT-4o demos last week. H200 nearly doubles the inference performance of H100, delivering significant value for production deployments. For example, using Llama 3, which with 700 billion parameters, a single NVIDIA HGX H200 server can deliver 24,000 tokens per second, supporting more than 2,400 users at the same time. That means for every $1 spent on NVIDIA HGX H200 servers at current prices per token, an API provider serving Llama 3 tokens can generate $7 in revenue over 4 years. With ongoing software optimizations, we continue to improve the performance of NVIDIA AI infrastructure for serving AI models. While supply for H100 improve, we are still constrained on H200. At the same time, Blackwell is in full production. We are working to bring up our system and cloud partners for global availability later this year. Demand for H200 and Blackwell is well ahead of supply, and we expect demand may exceed supply well into next year. Grace Hopper Superchip is shipping in volume. Last week at the International Supercomputing Conference, we announced that 9 new supercomputers worldwide are using Grace Hopper for combined 200 exaflops of energy-efficient AI processing power delivered this year. These include the Alps supercomputer at the Swiss National Supercomputing Center, the fastest AI supercomputer in Europe, Isambard AI at the University of Bristol in the UK, and Jupiter in the Jülich Supercomputing Center in Germany. We are seeing an 80% attach rate of Grace to Hopper in supercomputing due to its high energy efficiency and performance. We are also proud to see supercomputers powered with Grace Hopper take the number 1, the number 2, and the number 3 spots of the most energy efficient supercomputers in the world. Strong networking year-on-year growth was driven by InfiniBand. We experienced a modest sequential decline, which was largely due to the timing of supply, with demand well ahead of what we were able to ship. We expect networking to return to sequential growth in Q2. In the first quarter, we started shipping our new Spectrum-X Ethernet networking solution optimized for AI from the ground up. It includes our Spectrum-4 switch, Bluefield 3 DPU, and new software technologies to overcome the challenges of AI on Ethernet to deliver 1.6x higher networking performance for AI processing compared with traditional Ethernet. Spectrum-X is ramping in volume with multiple customers, including a massive 100,000 GPU cluster. Spectrum-X opens a brand new market to NVIDIA networking and enables Ethernet-only data centers to accommodate large-scale AI. We expect Spectrum-X to jump to a multi-billion-dollar product line within a year. At GTC in March, we launched our next-generation AI factory platform, Blackwell. The Blackwell GPU architecture delivers up to 4x faster training and 30x faster inference than the H100 and enables real-time generative AI on trillion-parameter large language models. Blackwell is a giant leap with up to 25x lower TCO and energy consumption than Hopper. The Blackwell platform includes the 5th generation NVLink with a multi-GPU spine and new InfiniBand and Ethernet switches, the X800 series, designed for a trillion-parameter scale AI. Blackwell is designed to support data centers universally, from hyperscale to enterprise, training to inference, x86 to Grace CPUs, Ethernet to InfiniBand networking, and air cooling to liquid cooling. Blackwell will be available in over 100 OEM and ODM systems at launch, more than double the number of Hoppers launched and representing every major computer maker in the world. This will support fast and broad adoption across the customer types, workloads, and data center environments in the first year of shipments. Blackwell time to market customers include Amazon, Google, Meta, Microsoft, OpenAI, Oracle, Tesla, and xAI. We announced a new software product with the introduction of NVIDIA Inference Microservices, or NIM. NIMs provide secure and performance-optimized containers powered by NVIDIA CUDA acceleration in network computing and inference software, including Triton Inference Server and TensorRT LLM with industry-standard APIs for a broad range of use cases, including large language models for text, speech, imaging, vision, robotics, genomics, and digital biology. They enable developers to quickly build and deploy generative AI applications using leading models from NVIDIA, AI21, Adept, Cohere, Getty Images, and Shutterstock, and open models from Google, Hugging Face, Meta, Microsoft, Mistral AI, Snowflake, and Stability AI. NIMs will be offered as part of our NVIDIA AI Enterprise software platform for production deployment in the cloud or on-prem. Moving to gaming and AI PCs. Gaming revenue of $2.65 billion was down 8% sequentially and up 18% year-on-year, consistent with our outlook for a seasonal decline. The GeForce RTX Supers GPUs market reception is strong and end demand and channel inventory remain healthy across the product range. From the very start of our AI journey, we equipped GeForce RTX GPUs with CUDA Tensor cores. Now with over 100 million of an installed base, GeForce RTX GPUs are perfect for gamers, creators, AI enthusiasts, and offer unmatched performance for running generative AI applications on PCs. NVIDIA has full technology stack for deploying and running fast and efficient generative AI inference on GeForce RTX PCs. TensorRT LLM now accelerates Microsoft Phi 3 mini model and Google's Gemma 2B and 7B models, as well as popular AI frameworks, including LangChain and Llama Index. Yesterday, NVIDIA and Microsoft announced AI performance optimizations for Windows to help run LLMs up to 3x faster on NVIDIA GeForce RTX AI PCs. And top game developers, including NetEase Games, Tencent, and Ubisoft, are embracing NVIDIA Avatar Character Engine to create lifelike avatars to transform interactions between gamers and non-playable characters. Moving to ProViz. Revenue of $427 million was down 8% sequentially and up 45% year-on-year. We believe generative AI and Omniverse industrial digitalization will drive the next wave of professional visualization growth. At GTC, we announced new Omniverse Cloud APIs to enable developers to integrate Omniverse industrial digital twin and simulation technologies into their applications, Some of the world's largest industrial software makers are adopting these APIs, including Ansys, Cadence, 3D Excite, at Dassault Systems, Brand, and Siemens. And developers can use them to stream industrial digital twins to spatial computing devices such as Apple Vision Pro. Omniverse Cloud APIs will be available on Microsoft Azure later this year. Companies are using Omniverse to digitalize their workflows. Omniverse-powered digital twins enable Wistron, one of our manufacturing partners, to reduce end-to-end production cycle times by 50% and defect rates by 40%. And BYD, the world's largest electric vehicle maker, is adopting Omniverse for virtual factory planning and retail configurations. Moving to automotive, revenue was $329 million, up 17% sequentially and up 11% year-on-year. Sequential growth was driven by the ramp of AI cockpit solutions with global OEM customers and strength in our self-driving platforms. Year-on-year growth was driven primarily by self-driving. We supported Xiaomi in the successful launch of its first electric vehicle, the SU7 sedan built on the Nvidia Drive Orin, our AI car computer for software-defined AV fleets. We also announced a number of new design wins on Nvidia Drive Thor, the successor to Orin, powered by the new Nvidia Blackwell architecture, with several leading EV makers, including BYD, XPeng, BAC's Ion Hyper, and Neural. Drive Thor is slated for production vehicles starting next year. Okay, moving to the rest of the P&L. GAAP gross margin expanded sequentially to 78.4% and non-GAAP gross margins to 78.9% on lower inventory charges. As noted last quarter, both Q4 and Q1 benefited from favorable component costs. Sequentially, GAAP operating expenses were up 10% and non-GAAP operating expenses were up 13%, primarily reflecting higher compensation-related costs and increased compute and infrastructure investments. In Q1, we returned $7.8 billion to shareholders in the form of share repurchases and cash dividends. Today, we announced a 10-for-1 split of our shares, with June 10th as the first day of trading on a split-adjusted basis. We are also increasing our dividend by 150%. Let me turn to the outlook for the second quarter. Total revenue is expected to be $28 billion, plus or minus 2%. We expect sequential growth in all market platforms. GAAP and non-GAAP gross margins are expected to be 74.8% and 75.5%, respectively, plus or minus 50 basis points, consistent with our discussion last quarter. For the full year, we expect gross margins to be in the mid-70% range. GAAP and non-GAAP operating expenses are expected to be approximately $4 billion and $2.8 billion, respectively. Full-year OpEx is expected to grow in the low 40% range. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $300 million, excluding gains and losses from non-affiliated investments. GAAP and non-GAAP tax rates are expected to be 17% plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. I would like to now turn it over to Jensen, as he would like to make a few comments.
Here we go.
Thanks, Colette. The industry is going through a major change. Before we start Q&A, let me give you some perspective on the importance of the transformation. The next industrial revolution has begun. Companies and countries are partnering with Nvidia to shift the trillion-dollar installed base of traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence. AI will bring significant productivity gains to nearly every industry and help companies be more cost and energy efficient while expanding revenue opportunities. CSPs were the first generative AI movers. With NVIDIA, CSPs accelerated workloads to save money and power. The tokens generated by NVIDIA Hopper drive revenues for their AI services. And NVIDIA cloud instances attract rental customers from our rich ecosystem of developers. Strong and accelerating demand for generative AI training and inference on the Hopper platform propels our data center growth. Training continues to scale as models learn to be multimodal, understanding text, speech, images, video, and 3D, and learn to reason and plan. Our inference workloads are growing incredibly. With generative AI, inference, which is now about fast token generation at massive scale, has become incredibly complex. Generative AI is driving a from foundation up, full stack computing platform shift that will transform every computer interaction. From today's information retrieval model, we are shifting to an answers and skills generation model of computing. AI will understand context and our intentions, be knowledgeable, reason, plan, and perform tasks. We are fundamentally changing how computing works and what computers can do. From general purpose CPU to GPU accelerated computing, from instruction-driven software to intention understanding models, from retrieving information to performing skills. And at the industrial level, from producing software to generating tokens, manufacturing digital intelligence. Token generation will drive a multi-year build-out of AI factories. Beyond cloud service providers, generative AI has expanded to consumer internet companies and enterprise, sovereign AI, automotive, and healthcare customers, creating multiple multi-billion-dollar vertical markets. The Blackwell platform is in full production and forms the foundation for trillion parameter scale generative AI. The combination of Grace CPU, Blackwell GPUs, NVLink, Quantum, Spectrum, NICs and switches, high-speed interconnects, and a rich ecosystem of software and partners let us expand and offer a richer and more complete solution for AI factories than previous generations. Spectrum X opens a brand new market for us to bring large-scale AI to Ethernet-only data centers. And NVIDIA NIMs is our new software offering that delivers enterprise-grade, optimized generative AI to run on CUDA everywhere, from the cloud to on-prem data centers to RTX AI PCs through our expansive network of ecosystem partners. From Blackwell to Spectrum X to NIMs, we are poised for the next wave of growth. Thank you.
Thank you, Jensen. We will now open the call for questions. Operator, could you please poll for questions?
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to 1 question.
Congrats, everybody.
Your first question comes from the line of Stacy Rasgon with Bernstein. Please go ahead.
Here we go, 1010.
Hi, guys. Thanks for taking my questions. My first one, I wanted to drill a little bit into the Blackwell comments that it's in full production now. What does that suggest with regard to shipments and delivery timing if that product doesn't sound like it's sampling anymore? What does it mean when that's actually in customers' hands if it's in production now?
We will be shipping. Well, we've been in production for a little bit of time, but our production shipments will start in Q2 and ramp in Q3, and customers should have data centers stood up in Q4.
Got it. So this year we will see Blackwell revenue, sounds like.
We will see a lot of Blackwell revenue this year.
Let's go, baby.
Our next question will come from the line of Timothy Arcuri with UBS. Please go ahead.
Thanks a lot. I wanted to ask Jensen about the deployment of Blackwell versus Hopper, just given the system's nature and all the demand for GB that you have. How does the deployment of this stuff differ from Hopper? I guess I ask because liquid cooling at scale hasn't been done before, and there's some engineering challenges both at the node level and within the data center. So do these complexities sort of elongate the transition, and how do you sort of think about how that's all going? Thanks.
Yep. Blackwell comes in many configurations. Blackwell is a platform, not a GPU. And the platform includes support for air-cooled, liquid-cooled, x86, and Grace, InfiniBand, now Spectrum X, and very large NVLink domain that I demonstrated at GTC, that I showed at GTC. And so for some customers, they will ramp into their existing install base of data centers that are already shipping Hoppers. They will easily transition from H100 to H200 to B100. And so Blackwell systems have been designed to be backwards compatible, if you will, electrically, mechanically. And of course, the software stack that runs on Hopper will run fantastically on Blackwell. We also have been priming the pump, if you will, with the entire ecosystem, getting them ready for liquid cooling. We've been talking to the ecosystem about Blackwell for quite some time. And the CSPs, the data centers, the ODMs, the system makers, our supply chain beyond them, the cooling supply chain base, liquid cooling supply chain base, data center supply chain base. No one is going to be surprised with Blackwell coming and the capabilities that we would like to deliver with Grace Blackwell 200. GB200 is going to be exceptional.
Dude, this is amazing. 1020, guys.
Our next question will come from the line of Vivek Arya with Bank of America Securities. Please go ahead.
Thanks for taking my question. Jensen, how are you ensuring that there is enough utilization of your products and that there isn't a pull ahead or hoarding behavior because of tight supply, competition, or other factors? What checks have you built in the system to give us confidence that monetization is keeping pace with your really, very strong shipment growth?
Well, I guess there's the big picture view that I'll come to, but I'll answer your question directly. The demand for GPUs in all the data centers is incredible. We're racing every single day, and the reason for that is because applications like ChatGPT and GPT-4o, and now it's going to be multimodality, and Gemini and its ramp and Anthropic, and all of the work that's being done at all the CSPs are consuming every GPU that's out there. There's also a long line of generative AI startups, some 15,000, 20,000 startups that in all different fields, from multimedia to digital characters, of course, all kinds of design tool productivity applications, digital biology, the moving of the AV industry to video so that they can train end-to-end models to expand the operating domain of self-driving cars. The list is just quite extraordinary. We're racing, actually. Customers are putting a lot of pressure on us to deliver the systems and stand it up as quickly as possible. And of course, I haven't even mentioned all of the sovereign AIs who would like to train all of their regional natural resource of their country, which is their data, to train their regional models. And there's a lot of pressure to stand those systems up. So anyhow, the demand, I think, is really, really high, and it outstrips our supply. Longer term, that's the reason why I jumped in to make a few comments. Longer term, we're completely redesigning how computers work, and this is a platform shift. Of course, it's been compared to other platform shifts in the past, but time will clearly tell that this is much more profound than previous platform shifts. And the reason for that is because the computer is no longer an instruction-driven only computer. It's an intention understanding computer. And it understands, of course, the way we interact with it, but it also understands our meaning, what we intend, that we asked it to do, and it has the ability to reason, inference iteratively to process a plan, and come back with a solution. And so every aspect of the computer is changing in such a way that instead of retrieving pre-recorded files, it is now generating contextually relevant, intelligent answers. And so that's going to change computing stacks all over the world. And you saw at Build that, in fact, even the PC computing stack is going to get revolutionized. And this is just the beginning of all the things that, what people see today are the beginning of the things that we're working in our labs and the things that we're doing with all the startups and large companies and developers all over the world. It's going to be quite extraordinary.
Our next question will come from the line of Joe Moore with Morgan Stanley. Please go ahead.
Great, thank you. Understanding what you just said about how strong demand is, you have a lot of demand for H200 and for Blackwell products. Do you anticipate any kind of pause with Hopper and H100 as you sort of migrate to those products? Will people wait for those new products, which would be a good product to have, or do you think there's enough demand for H100 to sustain growth?
We see increasing demand of Hopper through this quarter. And we expect demand to outstrip supply for some time.
That's big.
As we now transition to H200, as we transition to Blackwell. Everybody is anxious to get their infrastructure online. And the reason for that is because they're saving money and making money, and they would like to do that as soon as possible.
More demand. That's big.
Our next question will come from the line of Toshiya Hari with Goldman Sachs. Please go ahead.
Hi, thank you so much for taking the question. Jensen, I wanted to ask about competition. I think many of your cloud customers have announced, new or updates to their existing internal programs, right, in parallel to what they're working on with you guys. To what extent do you consider them as competitors, medium to long term? And in your view, do you think they're limited to addressing mostly internal workloads, or could they be broader in what they address going forward? Thank you.
Yeah, we're different in several ways. First, NVIDIA's accelerated computing architecture allows customers to process every aspect of their pipeline, from unstructured data processing to prepare it for training, to structured data processing, data frame processing like SQL to prepare for training, to training, to inference. And as I was mentioning in my remarks, that inference has really fundamentally changed. It's now generation. It's not trying to just detect a cat, which was plenty hard in itself, but it has to generate every pixel of a cat. And so the generation process is a fundamentally different processing architecture, and it's one of the reasons why TensorRT LLM was so well received. We improved the performance in using the same chips on our architecture by a factor of 3. That kind of tells you something about the richness of our architecture and the richness of our software. So one, you could use NVIDIA for everything from computer vision to image processing to computer graphics to, all modalities of computing. And as the world is now suffering from computing cost and computing energy inflation because general purpose computing has run its course, accelerated computing is really the sustainable way of going forward. So accelerated computing is how you're going to save money in computing, is how you're going to save energy in computing. And so the versatility of our platform results in the lowest TCO for their data centers. Second, we're in every cloud. And so for developers that are looking for a platform to develop on, starting with NVIDIA is always a great choice. And we're on-prem, we're in the cloud, we're in computers of any size and shape. We're practically everywhere. And so that's the second reason. The third reason has to do with the fact that we build AI factories. And this is becoming more and apparent to people that AI is not a chip problem only. It starts, of course, with very good chips. And we build a whole bunch of chips for our AI factories, but it's a systems problem. In fact, even AI is now a systems problem. It's not just one large language model. It's a complex system of a whole bunch of large language models that are working together. And so the fact that NVIDIA builds the system causes us to optimize all of our chips to work together as a system, to be able to have software that operates as a system, and to be able to optimize across the system. And just to put it in perspective in simple numbers, if you had a $5 billion infrastructure and you improve the performance by a factor of 2, which we routinely do, when you improve the infrastructure by a factor of 2, the value to you is $5 billion. All the chips in that data center doesn't pay for it. And so the value of it is really quite extraordinary. And this is the reason why today performance matters everything. This is at a time when the highest performance is also the lowest cost, because the infrastructure cost of carrying all of these chips costs a lot of money, and it takes a lot of money to fund the data center, to operate the data center, the people that goes along with it, the power that goes along with it, the real estate that goes along with it. All of it adds up. And so the highest performance is also the lowest TCO.
Our next question will come from the line of Matt Ramsey with TD Cowen. Please go ahead.
Thank you very much. Good afternoon, everyone. Jensen, I've been in the data center industry my whole career. I've never seen the velocity that you guys are introducing new platforms at the same combination of the performance jumps that you're getting. 5x in training. Some of the stuff you talked about at GTC up to 30x in inference. And that it's an amazing thing to watch, but it also creates an interesting juxtaposition where the current generation of product that your customers are spending billions of dollars on, it's going to be not as competitive with your new stuff very, very much more quickly than the depreciation cycles of that product. So I'd like you to, if you wouldn't mind, speak a little bit about how you're seeing that situation evolve itself with customers. As you move to Blackwell, they're going to have very large installed bases, obviously software compatible, but large installed bases of product that's not nearly as performant as your new generation stuff. And it'd be interesting to hear what you see happening with customers along that path. Thank you.
Yeah, really appreciate it. Three points that I'd like to make. If you're 5% into the build out versus if you're 95% into the build out, you're going to feel very differently. And because you're only 5% into the build out, anyhow, you build as fast as you can. And when Blackwell comes, it's going to be terrific. And then after Blackwell, as you mentioned, we have other Blackwells coming. And then we're on a 1-year rhythm, as we've explained to the world. And we want our customers to see our roadmap for as far as they like, but they're early in their build out anyways, and so they had to just keep on building. Okay, and so there's going to be a whole bunch of chips coming at them, and they just got to keep on building and just, if you will, performance average your way into it. So that's the smart thing to do. They need to make money today. They want to save money today, and time is really, really valuable to them. Let me give you an example of time being really valuable. Why this idea of standing up a data center instantaneously is so valuable, and getting this thing called time to train is so valuable. The reason for that is because the next company who reaches the next major plateau gets to announce a groundbreaking AI. And the second one after that gets to announce something that's, 0.3% better. And so the question is, do you want to be repeatedly the company delivering groundbreaking AI, or the company, delivering 0.3% better? And that's the reason why this race, as in all technology races, the race is so important. And you're seeing this race across multiple companies, because this is so vital to have technology leadership, for companies to trust the leadership and want to build on your platform, and know that the platform that they're building on is going to get better and better. And so leadership matters a great deal. Time to train matters a great deal. The difference between time to train that is, 3 months earlier just to get it done, in order to get time to train on the 3 months project, getting started 3 months earlier is everything. And so it's the reason why we're standing up Hopper systems like mad right now, because the next plateau is just around the corner. And so that's the second reason. The first comment that you made is really a great comment, which is, how is it that we're moving so fast and advancing so quickly? Because we have all the stacks here. We literally build the entire data center, and we can monitor everything, measure everything, optimize across everything. We know where all the bottlenecks are. We're not guessing about it. We're not putting up PowerPoint slides that look good. We're actually, we also like our PowerPoint slides to look good, but we're delivering systems that perform at scale. And the reason why we know they perform at scale is because we built it all here. Now, one of the things that we do that's a bit of a miracle is that we build entire AI infrastructures here, but then we disaggregate it and integrate it into our customers' data centers however they like. But we know how it's going to perform, and we know where the bottlenecks are. We know where we need to optimize with them, and we know where we have to help them improve their infrastructure to achieve the most performance. This deep, intimate knowledge at the entire data center scale is fundamentally what sets us apart today. We build every single chip from the ground up. We know exactly how processing is done across the entire system. And so we understand exactly how it's going to perform and how to get the most out of it with every single generation. And so I appreciate it. Those are the 3 points.
Not bad, man.
Your next question will come from the line of Mark Lupakis with Evercore ISI. Please go ahead.
1009.
Hi, thanks for taking my question. Jensen, in the past, you've made the observation that general purpose computing ecosystems typically dominated each computing era. And I believe the argument was that they could adapt to different workloads, get higher utilization, drive the cost of compute cycle down. And this was a motivation for why you were driving to a general purpose GPU CUDA ecosystem for accelerated computing. And if I mischaracterize that observation, please do let me know. So the question is, given that the workloads that are driving demand for your solutions are being driven by neural network training and inferencing, which on the surface seem like a limited number of workloads, then it might also seem to lend themselves to custom solutions. And so then the question is, does the general purpose computing framework become more at risk, or is there enough variability or a rapid enough evolution on these workloads that support that historical general purpose framework? Thank you.
Yeah, NVIDIA's accelerated computing is versatile, but I wouldn't call it general purpose. Like, for example, we wouldn't be very good at running the spreadsheet. That was really designed for general purpose computing. And so there's the control loop of an operating system code probably isn't fantastic for general purpose computing, not for accelerated computing. And so I would say that we're versatile, and that's usually the way I describe it. There's a rich domain of applications that we're able to accelerate over the years, but they all have a lot of commonalities. Maybe some deep differences, but commonalities. They're all things that I can run in parallel. They're all heavily threaded. 5% of the code represents 99% of the runtime, for example. Those are all properties of accelerated computing. The versatility of our platform and the fact that we design entire systems is the reason why, over the course of the last 10 years or so, the number of startups that you guys have asked me about in these conference calls is fairly large. And every single one of them, because of the brittleness of their architecture, the moment generative AI came along, or the moment diffusion models came along, the moment the next models are coming along now, and now all of a sudden, look at this, large language models with memory. Because the large language model needs to have memory so they can carry on a conversation with you, understand the context. All of a sudden, the versatility of the Grace memory became super important. And so each one of these advances in generative AI and the advancement of AI really begs for not having a widget that's designed for one model, but to have something that is really good for this entire domain, properties of this entire domain, but obeys the first principles of software. That software is going to continue to evolve. That software is going to keep getting better and bigger. We believe in the scaling of these models. There's a lot of reasons why we're going to scale by easily 1 million times in the coming few years for good reasons, and we're looking forward to it, and we're ready for it. And so the versatility of our platform is really quite key. And it's not if you're too brittle and too specific, you might as well just build an FPGA or you build an ASIC or something like that. But that's hardly a computer.
Our next question will come from the line of Blaine Curtis with Jefferies. Please go ahead.
Hey, thanks for taking my question. I actually kind of curious. I mean, being supply constrained, how do you think about? I mean, you came out with a product for China H20. I'm assuming there'd be a ton of demand for it, but obviously you're trying to serve your customers with the other Hopper products. Just kind of curious how you're thinking about that in the second half. You could elaborate any impacts, what you're thinking for sales as well as gross margin.
I didn't hear the questions. Something bleeped out.
H20 and how you're thinking about allocating supply between the different Hopper products.
Well, we have customers that we honor, and we do our best for every customer. It is the case that our business in China is substantially lower than the levels of the past, and it's a lot more competitive in China now because of the limitations on our technology, and so those matters are true. However, we continue to do our best to serve the customers and the markets there, and to the best of our ability, we'll do our best. And so, but that, I think overall the comments that we made about demand outstripping supply is for the entire market, and particularly so for H200 and Blackwell towards the end of the year.
Our next question will come from the line of Srini Pajjuri with Raymond James. Please go ahead.
Thank you. Jensen, actually more of a clarification on what you said.
GB200 systems, it looks like there's a significant demand for systems. Historically, I think you've sold a lot of HGX boards and some GPUs, and the systems business was relatively small. So I'm just curious, why is it that now you are seeing such a strong demand for systems going forward? Is it just the TCO, or is it something else, or is it just the architecture? Thank you.
Yeah, I appreciate that. In fact, the way we sell GB200 is the same. We disaggregate all of the components that make sense, and we integrate them into computer makers. We have 100 different computer configurations that are coming this year for Blackwell, and that is off the charts. Hopper, frankly, had only half, but that's at its peak. It started out with way less than that even, and so you're going to see liquid cooled version, air cooled version, x86 versions, Grace versions, so on and so forth. And there's a whole bunch of systems that are being designed, and they're offered from all of our ecosystem of great partners. Nothing has really changed. Now, of course, the Blackwell platform has expanded our offering tremendously. The integration of CPUs and the much more compressed density of computing, liquid cooling is going to save data centers a lot of money in provisioning power, and not to mention to be more energy efficient. And so it's a much better solution. It's more expansive, meaning that we offer a lot more components of a data center, and everybody wins. The data center gets much higher performance, networking, from networking switches, networking, of course, NICs. We have Ethernet now, so that we can bring NVIDIA AI to a large-scale NVIDIA AI to customers who only know how to operate Ethernet because of the ecosystem that they have, and so Blackwell is much more expansive. We have a lot more to offer our customers this generation around.
Our next question will come from the line of William Stein with Truist Securities. Please go ahead.
Great. Thanks for taking my question. Jensen, at some point, NVIDIA decided that while there were reasonably good CPUs available for data center operations, your ARM-based Grace CPU provided some real advantage that made that technology worth delivering to customers, perhaps related to cost or power consumption or technical synergies between Grace and Hopper or Grace and Blackwell. Can you address whether there could be a similar dynamic that might emerge on the client side, whereby while there are very good solutions, you've highlighted that Intel and AMD are very good partners and deliver great products in x86, but there might be some, especially in emerging AI workloads, some advantage that NVIDIA can deliver that others have more of a challenge?
Well, you mentioned some really good reasons. It is true that for many of the applications, our partnership with our x86 partners are really terrific, and we build excellent systems together. But Grace allows us to do something that isn't possible with the system configuration today. The memory system between Grace and Hopper are coherent and connected. The interconnect between the two chips, calling it two chips is almost weird because it's like a super chip. The two of them are connected with this interface. That's like a terabytes per second. It's off the charts. And the memory that's used by Grace is LPDDR. It's the first data center grade low power memory. And so we save a lot of power on every single node. And then finally, because of the architecture, because we can create our own architecture with the entire system now, we could create something that has really large NVLink domain, which is vitally important to the next generation large language models for inferencing. And so you saw that GB200 has a 72 node NVLink domain. That's like 72 Blackwells connected together into one giant GPU. And so we needed Grace Blackwells to be able to do that. And so there are architectural reasons, there are software programming reasons, and then there's system reasons that are essential for us to build them that way. And so if we see opportunities like that, we'll explore it. And so today, as you saw at the build yesterday, which I thought was really excellent, Satya announced the next generation PCs, Copilot plus PC, which runs fantastically on NVIDIA's RTX GPUs that are shipping in laptops, but it also supports ARM beautifully, and so it opens up opportunities for system innovation, even for PCs.
Our last question comes from the line of CJ Muse with Cantor Fitzgerald. Please go ahead.
Yeah, good afternoon. Thank you for taking the question. I guess, Jensen, a bit of a longer-term question. I know Blackwell hasn't even launched yet, but obviously investors are forward-looking, and amidst rising potential competition from GPUs and custom ASICs, how are you thinking about NVIDIA's pace of innovation ahead? Your million-fold scaling over the last decade, truly impressive. CUDA, sparsity, precision, Grace, coherent connectivity. When you look forward, what frictions need to be solved in the coming decade? And I guess maybe more importantly, what are you willing to share with us today?
Well, I can announce that after Blackwell, there's another chip.
Oh my goodness!
And we are on a 1-year rhythm, and so you can also count on us having new networking technology on a very fast rhythm. We're announcing Spectrum X for Ethernet, but we're all in on Ethernet, and we have a really exciting roadmap coming for Ethernet. We have a rich ecosystem of partners. Dell announced that they're taking Spectrum X to market. We have a rich ecosystem of customers and partners who are going to announce taking our entire AI factory architecture to market. And so for companies that want the ultimate performance, we have InfiniBand Computing Fabric. InfiniBand is a computing fabric. Ethernet's a network. And InfiniBand, over the years, started out as a computing fabric, became a better and better network. Ethernet is a network. And with Spectrum X, we're going to make it a much better computing fabric. And we're fully committed to all three links: NVLink computing fabric for a single computing domain, to InfiniBand computing fabric, to Ethernet networking computing fabric. And so we're going to take all three of them forward at a very fast clip. And so you're going to see new switches coming, new NICs coming, new capability, new software stacks that run on all three of them. New CPUs, new GPUs, new networking NICs, new switches, a mountain of chips that are coming. And all of it, the beautiful thing is all of it runs CUDA, and all of it runs our entire software stack. So if you invest today on our software stack, without doing anything at all, it's just going to get faster and faster and faster and faster. And if you invest in our architecture today, without doing anything, it will go to more and more clouds and more data centers, and everything just runs. And so I think the pace of innovation that we're bringing will drive up the capability on the one hand and drive down the TCO on the other hand. And so we should be able to scale out with the NVIDIA architecture for this new era of computing and start this new industrial revolution where we manufacture not just software anymore, but we manufacture artificial intelligence tokens, and we're going to do that at scale. Thank you.
That will conclude our question and answer session and our call for today. We thank you all for joining, and you may now disconnect.
All right, there we go. NVIDIA earnings. What an earnings for NVIDIA. Let's just recap what we heard on NVIDIA. That last question was a hell of an answer that Jensen Huang just gave. And then we'll be done for today. First of all, thank you everybody for joining and being part of this community and being part of the chat. It's always super, super fun on big earnings days like this to see what we got going on. We are above $1,000 a share right now. It's 1,002, so it's holding on to that $1,000 level. I think we reached that 1,023 at the top, and it makes sense why we're over 1,000. Now, do we close at 1,000? Do we get to 990? Whatever it is, I think it's largely irrelevant given what Jensen Huang just said. I heard a couple things in this call. The first thing, which is the last question's response I just heard, was that they have created a new chip after Blackwell, and Blackwell's a chip and a platform itself, but they're already working on and likely in further stages of development, a new version of how they think AI will look like over the next year. And, as a company, you have to have new versions of chips, just like the iPhone has iPhone 13, 14, 15. You have to have a new version, and you have to be planning that years ahead. So they're selling Blackwell, and they're saying Blackwell is amazing. Customers can't wait to get their hands on it, but they're already thinking ahead of what's the next version of it, which is why they're probably going to continue raising guidance. Right now, they raised $8 billion for next quarter. They just did $26 billion. They beat by $2 billion in revenue. It seems like the future, if I had to summarize the call in one sentence, it would be the future of NVIDIA has demand waiting for them. And I think the biggest concern most of the bears have had is that this is too cyclical of a business, and we can't really identify when the demand is going to stop. When is the music going to stop in musical chairs, and who's going to be running to try to take a seat? It doesn't look like the music's stopping anytime soon. At least that's what we're seeing in the context of NVIDIA. Now, here again are the numbers we got on NVIDIA today, which was, just I don't even know how to describe these numbers. They're out of this world. 262% year-over-year revenue, $26 billion. Net income was $15 billion, which means they have a 58% net income margin. For every dollar NVIDIA generates in revenue, they keep 58 cents. Usually only software companies do that. NVIDIA is a hardware company, but the nature of their business and how intensive it is, and the fact that the CUDA software kind of permeates through all the different platforms that they deploy, which is what Jensen talked about a lot in the call as well, it gives them the ability to have these high margins. Net income is up 462% year over year. Operating income is up 492% year over year. And then their gross margin expands 12 basis points year over year. As you can see, the gross margin is 78.9%. Last quarter, it was 76.7%. A year ago, it was 66.8%. So absolutely incredible numbers right there in the context of NVIDIA. Stop Console War says, and all the chips will be able to speak to each other. That's wild. They created that way of chips working with one another faster. That is a very important point. We saw that at the GTC conference a month ago. The chips are able to interact with each other in a way that not only makes them symbiotic and cohesive with each other, it opens up new opportunities for what they can deploy against the edge and on-prem for how companies need to generate the energy to implicate AI, but also the actual models that they're running on AI. We also have NVIDIA's NIM software, which is their version of deploying LLMs on-prem, which is also going to be incredibly exciting for the companies that want to adopt a full suite of services, not just chips or not just the Blackwell platform from NVIDIA. This is a company that is just not slowing down at the rate of innovation, and we're alive to witness what they're doing. A 10-for-1 stock split that also happened today. And on the call, they basically said that makes it more accessible to shareholders, which is why it's very important for them to do the 10-to-1 stock split. On the call, when they said, hey, are we going to see Blackwell revenue? NVIDIA says, actually, no, we're going to see a lot of Blackwell revenue this year. So Jensen said, hey, Blackwell is already up and running. We presented it at the conference last week, but it's not just about the conference, showing it off. It's in motion, right? We are generating revenue from this, and it's going to help us meet the projections that we're looking at this year as well. Matt Watson, thank you for becoming a channel member. Really appreciate it. He just gifted a membership as well. So if anyone wants to claim that, thank you, Matt. Really, really means the world to me, and appreciate you being here as well. This was an awesome earnings, man. This was an awesome earnings. I don't own a ton of NVIDIA. It's not really the stock that I kind of bet my portfolio on, or I've been accumulating as part of my portfolio. And really, I didn't know about them that much over the past 2 years, right? So I didn't really understand the story that well. But if you did, you deserve to be up right now. Robinhood is up 2% in the pre-markets, crossing $20. SMCI is up 3%. Snowflake is up 4%. TSM is up 2.85%. AMD is up 1.3%. The reason NVIDIA is so important for the broader equity markets, the S&P is up after hours, is because NVIDIA, I believe, is 25% of the profits of the S&P 500. Some insane stat. Like NVIDIA needs to do what they're doing in order to justify the fact that the S&P has had an incredible year. Remember, 2023, we had a good year. By the way, I'm about to show you guys a stat that if you're a bear, you're going to want to mute the stream because this is a stat that bears probably don't want to hear. But the S&P in 2023 had a very good year. And so did the NASDAQ. So the fact that we're still maintaining this momentum is just, it's only based on what NVIDIA is doing. S&P up 12% year to date over the past year, 27%. It's not easy to have a year like that for the S&P. 2022, we all remember what happened, right? We saw the S&P down 25%. Individual equities, NVIDIA was down, I think, 40, 50%. Palantir was down 70, 80%. Like, things got really bad. And now it looks like AI is here to stay. ChatGPT goes mainstream. NVIDIA is capitalizing on this moment. And it's very exciting to see how it's playing out. Hood Rich, I love that username, especially the hood part of that. Thank you for becoming a member of the channel and gifting a channel membership. It means so much. Thank you for being here, man. Really, really, really appreciate it. Okay, here's a stat that I think a lot of you are going to like to see. So this is from our boy Ryan Dietrich at Carson Research. So let's read the stat. A good first 100 days could mean a great rest of the year. So stay with me here because there's a couple levels to it, but let's talk about it. Tomorrow, which is Wednesday, May 23rd, is the 100th trading day of 2024. Okay. When we are up 10% year to date, currently the S&P is up 12%. So as long as we don't fall 2% or more than 2% tomorrow, we will be up 10% year to date. The rest of the year on median is up 10%. The average is up 8.8%, and they're higher 85% of the time. For the past 9 times, we've had a year-to-date return of up 10% on day 100 in a trading year. 9 out of 10 times, or out of the past 9 times, 8 times saw double-digit gains. So the last time this happened was 2021. In 2021, the year-to-date return on the S&P 500 on day 100 was 11.7%. The rest of the year ended up 13.6%. So if we just take the average, given we're going to be up 10% year-to-date tomorrow, if the S&P doesn't fall 3%, we will be up 8% for the rest of the year, which means let's just do 8.98. So let's just do 9%. 530 times 0.09 plus 530 gives us a 577 end of year S&P 500. If the S&P is 577 by the end of the year, I don't know, man. If the S&P is 577 by the end of the year, I don't think Palantir is at $21. I don't think Nvidia is stuck at 1,000. I kind of don't think Tesla's stuck in the 170s. I think we're going to see some momentum. Now, 2025, anything could happen. We could get drawdowns, all that stuff. But it does seem like it's going to lift the entire market if this ends up happening. And again, one of the things, NVIDIA right here, up 5%, still holding $1,000, not selling off yet. One of the things that I think is really important about understanding this market is that every day on the market open, so if you're new here, we do a market open show every day. Every day we're trying to figure out what's the bear case. Because to me, I don't want to be one of the channels that's delusionally bullish. So we look at a lot of perspectives, but I also don't want to be delusionally bearish, right? You want to be sort of balanced and see what the perspective is. And the reason we lean more towards the bull side of the narrative is because every stock that is up on earnings, they had to perform. You look at a company like Shopify, they grew 22% year over year, and they fell 30% on earnings, or 25%. And the reason they fell, as you can see the drop right here from about $80 to 56, is because the market said, hey, you guys are growing, you're doing good, but we need better from you. You know, the multiple's a little bit too much. Robinhood, they absolutely crushed on earnings and they fell. They're up now, but they crushed on earnings. Market didn't give it to them. TSM, they went from 150, they're at 160 right now, but they went to 125 after their earnings because their numbers, weren't as exciting to the market. This is not 2021 where anything gets a multiple because interest rates are so low that asset prices get inflated. I actually think interest rates being 5% forces the market to really find the quality and get rid of all the crap. Now, I know the GameStop meme stocks have been going higher, but that lasted for about a couple of days. GameStop is now down about 60% from its highs. It's still up a lot year to date from like $9 to $21, but that seems to be more fun money in the system. That's not a general trend. Whereas in 2021, it was a general trend. Now it's like, you got to really prove that you're worth your money if you want any momentum. And I think that's what the market's proving. And that's why it seems to be in a bull market, on top of the fact that inflation is coming down. And if inflation comes down, we get another good earnings in Q2. Maybe we get a rate cut in September or July. This could be a strong end of the year for the broader markets. Crunch, thank you for the $19.99 super chat. Really appreciate it. Any bets that Tesla has not been an early Blackwell adopter and they use them to realize FSD's V12.4 plus the next gen Huang mentioned are already allocated to the Cybertruck V12. View my profile for how I got my handle. Yeah, so I agree with you. I do think that a lot of companies have been piloting Blackwell, and Jensen kind of, he kind of alluded to that to an extent, right, with different customers. And, someone asked him, how do you prioritize the customers that get access to the product? Snowflake right here up 4%. And he kind of hesitated a little bit, but he said, look, we have certain relationships with customers that we value. I'm assuming Tesla buying 85,000 H100s, Meta that has like 300,000 H100s. Jensen Huang values those customers more than the average company. And so they get access to the priority chips. And that's good for Tesla and Meta because those investors want to make sure that the advertising moat of Meta that's fueled by Jensen Huang's H100 NVIDIA AI chips that make the targeting as specific as it needs to be gets prioritized. FSD. The only way FSD becomes FSD is if you have the GPUs that are training those models or those neural nets to be effective. So all of this affects all the other Mag 7 companies as well, with NVIDIA doing exceptional on their earnings. NVIDIA right now 1,003, and that's why you want NVIDIA to do well. Meta's up a little bit after hours. Microsoft's up a little bit. Apple's down. Faraday Future, another meme stock, that's down 19%. Tesla 179 after hours, and then Google right here down a little bit, 177 after hours as well. Jensen had Elon's back for sure. Yeah, 100%. Jensen cares about innovation, dude. I think Jensen is supporting Elon all the way, and he wants to make sure that Elon, Zuckerberg, these guys actually succeed. Because remember, Elon, Zucks, and Jensen are all founders. They're the only founders left that are running their companies. Apple has Tim Cook, Microsoft has Satya, and then Amazon has Jassy. So, and then Google has Sundar, right? So those are the three companies that are really founder-led. And in this, I guess, not even economy, this world, you want a company that is run by a founder, especially if they're trying to really take over the world. So I imagine Jensen Huang has a special spot in his heart for builders and founders, and that's the momentum we're seeing right now. Christian, thank you for the $10 super chat. They just delivered H200. Blackwell is not out yet. It's not even produced yet. Nobody is training on that. Dell, SMCI, TSM, etc. Yeah, that's fair. That's fair. We do know OpenAI just got an H200 chip. So if they're getting early versions of it, then they're going to be prioritizing the ones that actually matter. Yes, Peter Beck still runs Rocket Lab. That's correct. We do have another founder-led company, Rocket Lab. Rocket Lab is not as big as some of the Mag 7s, but one day maybe it is. Rocket Lab right here up a little bit, 435 after hours as well. Now, outside of NVIDIA, we have some crypto news that is big, which is why Robinhood and Coinbase after hours, I think, are doing well. Bitcoin is at 69,335, Ethereum at 3,700. The House approved a crypto bill. Let me get it real quick. And that crypto bill is something the Democrats finally stopped being annoying about because they realized that no one's going to vote for them if they don't pass it. And this is what we got right here, which is good for the crypto company. It's crypto bill FIT 21 just passed the House, 278 to 136. Now it goes to the Senate. I don't know exactly what this crypto bill is. I've read a little bit about it, but not enough. Let's do a quick Google search on this one. So we have the House passages of the digital asset legislation passes the crypto baton to the Senate. So basically, I think it's going to be a better set of regulations for what is going to happen in crypto. The Financial Innovation and Technology for the 21st Century Act, FIT, marks the first time a major crypto bill has been cleared. The issue now heads to the U.S. Senate. Support for such an effort remains unclear. The U.S. has fallen behind other global jurisdictions in establishing crypto regulations. Vlad just tweeted as well, make sure you call your Senate members to vote in support of this bill. I don't know exactly the specifics of the bill, but it seems like it sets up a framework and guidelines for crypto regulations, which is going to be really good for the broader crypto companies as well. So that's good news all around, dude. Good news all around for the crypto companies, for Bitcoin, for the Mag 7, and for Nvidia maintaining momentum. And again, the big thing, even if you don't own Nvidia, Nvidia is still above 1,000 after hours, is that they affect every single stock in the market in some way or another. At this point, we are living through one of the most transformational companies of all time, producing just incredible results. And the only way for these results to maintain themselves is if the epicenter of the results, Nvidia, doesn't mess up. Because if Nvidia fell apart, that would mean everything in the supply chain, TSM, OpenAI, all these guys are experiencing less momentum. And it's a really interesting time in history where, last time it happened was around 1999, where one company or one idea, in that case it was internet, now it's AI, actually set up a framework for every single other company on the planet to benefit. And that's what's happening. I mean, every company benefit from the internet. It looks like every single company on the planet in some capacity is going to benefit off AI, and Nvidia is at the heart of it. So it's nice to see that their momentum continues to go higher. All right, there we go. Yeah, I don't know what happened with First Solar, up 18%. Enphase had a great day as well. I have no idea. I didn't get a chance to see that. Enphase, TJ's covered calls are definitely underwater right now. So, yeah, Enphase had a great day, up 9%. I don't know why it's up 9%. Especially with the Fed being as hawkish as they were today, I have no idea why a solar. I know Enphase announced some new microinverters in Finland, but I don't know if that was enough to pump it 9%. But it's been a good day overall for a lot of these companies. Now, last thing I'll say here, we'll see what happens to Nvidia as the market opens. I mean, again, I don't think there was any red flags in this. I'm going to keep going through the numbers. We'll be live in the market open tomorrow, 8:45 a.m. and see what else is in store for Nvidia. But so far, revenues look incredible. Growth looks incredible. Guidance, $28 billion. Absolutely amazing. We'll just see how the market treats it tomorrow as Nvidia opens at the bell, and 10-for-1 stock split, which is going to get people excited for Nvidia as well. All right, that's it for me. Thank you, everybody, for joining. If you're new to the channel, we do a market open live every single day. Again, I really appreciate it, guys. I think at the peak, we had 3,500. You got someone like Meet Kevin who has 10,000. So there's obviously a lot of work we can keep doing, but it's really cool to keep growing and try to do what we got to do. And hopefully you guys keep coming to the stream because you get a level of entertainment and education, but most importantly, humor from these streams, and that keeps you coming back. Really appreciate it, guys. It means the world to me. Love you all. Thank you for being here. We'll be back 8:45 a.m. Eastern Standard Time tomorrow, and let's see what happens in the markets. Bye, everyone. Have a good one.